Welcome back to Bloomberg Daybreak Europe. Now, at the top of the hour, we're going to get the latest UK inflation data. So let's have a little bit of a preview of that, shall we? Yesterday, of course, you had that hottest wage growth on record for the UK in the latest labour market numbers. The pound didn't quite know what to make of it, maybe because you also saw unemployment rising, but traders did boost their bets for where the BOE is going to take rates ultimately. So they now see them coming in just under 6%. They did touch 6.15% at what stage yesterday. And our economists reckon that either of those levels would trigger a recession in the UK. Maybe that's what was weighing on the pound. Nonetheless, if we see a hotter than expected inflation print today, you can expect those bets to rise further. So today, economists expect headline CPI to drop again, as we were hearing from our economist Dan Hansen earlier. That would be from 7.9% to 6.7% in June. But economists do reckon that core inflation is going to stay sticky and fall only from 6.9% to 6.8%. The Monetary Policy Committee is going to be having a close eye on that. Currently, Goldman economists expect a quarter-point hike from the BOE next month, but the idea of a half-point hike is back on the table, at least according to analysts at Saxo Bank and TD Securities. But don't forget as well, we have got a whole other batch of jobs and inflation data before the next BOE decision on September the 21st. So we'll keep an eye on that as well. Of course, how much inflation falls is going to be crucial to getting UK stocks back in investors' good books. So those numbers at the top of the hour. Staying in Britain, ever since British politician turned pundit Nigel Farage said that his bank account was being shut down because of his political beliefs, the issue of, and I'm putting some air trade marks in here, debanking has been thrust into the public spotlight. However, it is an issue that British Muslims have had to contend with for some time now. Joining me now is Bloomberg's fintech reporter Aisha Ghani, who's been researching this story. Really fantastic reporting. What actually happens when you get debanked, as it's known, and how widespread is this problem?
There are a few ways that people are losing their bank accounts. What typically has happened is that bank accounts will be frozen for days or even weeks. I spoke to one man, Akil Ahmed from Luton, who's a former postman. His bank account was frozen for 6 weeks. In that time, he was unable to do his grocery shopping. His direct debit started bouncing and he couldn't pay his bills. After that, he received a letter saying that both his and his wife's accounts were shut down and also his children's savings accounts. And that's been a typical story that I've been hearing.
I mean, it's really alarming stuff in a cost of living crisis. How is the Muslim community being so particularly hit hard by this problem of debanking?
Now, we know that Muslims are less likely to have current accounts. We know they are most likely to be in poverty. Now, I've spoken to a range of people from, like I said, a former postman to someone who's a financial services lawyer, people who are even in banking, and they've all had their banks stripped away from them in different ways. And you're absolutely right, in a cost of living crisis, it makes it all the more difficult. I spoke to a man who had his Barclays bank account shut down 2 days ago. He said he had to walk 4 miles because he couldn't pay for the bus or the tube or get an Uber. So this kind of illustrates just how necessary having a bank account is in Britain today.
Yeah, in a nearly cashless society. So, okay, how have banks responded to this?
So banks have responded by, well, many of the chief executives during the earnings season said that they don't take people's personal or political beliefs into account. And that is a line that they have maintained. But we know that the Financial Conduct Authority has said last week that they will be investigating this and will be writing to banks. We know that 1,000 people a day are losing their bank accounts, but we don't know just who's losing it and why.
All right, thank you for that reporting. Digging deeper beneath the lines that have been coming out from banks in earnings season on a very important story. Bloomberg's Aisha Ghani with that reporting. Thank you. Now, we are expecting to hear from the CEO of Carlsberg later at 7 a.m. He's going to be giving an interview to Bloomberg in the Markets Today programme. We did have Carlsberg earnings yesterday, the shares gaining as much as 2.8% after the Danish brewer increased its annual profit forecast for the second time since April on the back of a solid first half. The stock's up 10.6% year to date. I suppose if Carlsberg did earnings, they'd be pretty good, you might say. It's been working hard to keep consumers drinking its beer, despite, of course, the price hikes that
Okay, we've got the 3 minutes to open. As you can see, we're arranging, we create a megaphone. So, waiting for the news at 7 a.m. from UK.
That interview up shortly here on Bloomberg TV. You might want to stick a Carlsberg in the fridge as well, because at 11 a.m. you're going to be keeping a sneaky eye, I'm sure, on the Women's World Cup semi-finals. It's Australia's Matildas versus England's Lionesses. You can see how they fared in previous matches on the screen here. And speaking of inflation, here's how their economies compare. A common denominator in the two of them, though, is, of course, their favourite show, Daybreak Europe. Up next, Markets Today. This is Bloomberg.
Okay, we didn't move anywhere. Dollar, it's dropping hugely. Ooh, the pound got a huge jump up. Was the last time?
This is Bloomberg Markets Today. I'm Anna Edwards, live in London with Tom McKenzie. Mark Cudmore, our Markets Live managing editor, joins us from Singapore to take us through the market action this hour.
Your top headlines, of course, as we head up to the cash trade just less than an hour away. And the top stories, Asian equities retreat for a fourth day on more concerns over China's economy. Strong US retail sales add doubt that the Fed's inflation fight is in fact finished. UK headline inflation is set to take a step lower today, but the pressure is on for the BOE after the hottest wage growth on record. We will look at the data imminently. Plus, the world's largest owner of stocks rebounds thanks to investments in big tech. We break down the numbers from Norway's $1.4 trillion sovereign wealth fund.
Those are the headlines then, Tom. Let's get to some of the breaking news. As you mentioned, we've got UK CPI breaking right now across the Bloomberg terminal, and it has stepped down quite significantly from the last month, so that's the good news, but not quite as much as had been expected. That would be the bad news, I suppose, if you're looking for this inflation rate to come down as the Bank of England is. So the prior number was 7.9%. This is the year-on-year figure on CPI, and it's come down
It looks like it will be quiet
6.8%,
morning
which is
morning
not quite the
session.
6.7% that was that the market was looking for, which might explain
The
why we're
data
seeing
we'll see today,
a
and
spike up in the
I'm
pound.
not
At least
sure
there is
how we
nothing
trade
more
anything
dovish than
today.
expected in here. If anything, slightly hotter than anticipated, and so the pound goes a little higher. We saw that knee-jerk reaction yesterday as the market responded to the hot wage data, and that pushed up expectations of rate hikes. And so some of that was paired as we went through the session, not all, but some. So interesting to watch how that dynamic develops. We've also got numbers on RPI, which matter less as far as statisticians are concerned, but still matter for certain products in the markets, not least utilities, as we found out in recent months. That number has come in line at 9%, the year-on-year IPI number. Mark, your thoughts as we look at these early readings then on UK CPI?
Yeah, good morning, Anna. I think you've defined it very well there, saying a slightly hot reading in inflation. I think that given wages print was so strong yesterday, people were really nervous about this. And so even though the print's come in a bit hotter than expected, I think there'll be relief that we saw both core and headline below 7%. That is kind of good news. So I think the short-term reaction will be relatively muted. But the bigger picture is, this is kind of confirming the story from wages yesterday, that inflation will be sticky. That is a global theme, but UK seems to have it worse than most. And the fact is, UK core CPI year on year did not move down at all. It is stubbornly stuck at 6.9% year on year. That is still a way too high number, and this is problematic for the Bank of England.
It is indeed. Of course, markets pricing in 3 additional rate hikes on the back of the wage data yesterday. 127 on the pound then, Mark. We wait to see what happens across, of course, UK equities when their market starts trading in a little under an hour, given the losses of yesterday on the FTSE 100. As we look at the futures, Mark, you are pointing to downside on European stocks, down by around 0.5%. China back in the headlines as well as we look past the data coming through from the UK. House sales falling for a second straight month out of China for the month of July. You did see some liquidity injections from the PBOC and an attempt to shore up the yuan. But again, the narrative of whether or not this is too little too late from policymakers there trying to address the challenges of that economy. And you had the downgrades in terms of the forecast coming through from the likes of JP Morgan, Barclays, below that 5% estimate itself from the Chinese government. 4.8% is the growth forecast now from JP Morgan for China on the back of expectations that there will be continued challenges for, of course, that economy. When it comes to the US futures, of course, we can look at those. Given what we saw yesterday, the retail sales number, it's the good news is bad news picture that filtered through for investors and equities yesterday. And again, you saw yields higher as well on the back of that. Expectations that the Fed will have to go longer higher for longer in terms of trying to crack and push through some softness for that economy. So far, the US consumer is reminding us of their resilience. Let's get back to the earnings picture then. Carlsberg in focus for us this morning. They came through with top line results yesterday, a beat when it comes to the first half profit and a raising of forecasts. We also know that they're looking at a buyback of around £1 billion Danish kroner, I should say, a share buyback of around £1 billion Danish kroner. First half sales coming in close to 37.8 billion in terms of first half sales for Carlsberg. And we also get net income coming in at 3.5 billion. The estimates have been 4.16 billion, but it was the first half profit for Carlsberg that came in and was sort of being, again, the raising of the growth forecast for the rest of the year. Let's bring in then the CEO, Case Tart, CEO of Carlsberg, joining us now. Good morning, Case. Thanks for joining us. Your reaction to these results, can you continue to lift prices? That's been consequential, hasn't it, in terms of securing the margin for this business? Do price hikes continue for Carlsberg?
Yeah, what we have done over the last half year is indeed to raise the prices in line with the cost inflation we encountered. We have done that across our territories, but especially, of course, in Europe. And hence you see a net revenue per hectoliter, which is roughly 10% higher than before. And by that we have been able to ensure that we would remain to have the gross profit that we needed in order to further develop our business and also to invest further in our brands.
And good morning to you, Case. It does seem as if a lot of the strength you're reporting yesterday and today has been driven by higher prices. Are you seeing anywhere pushback from consumers, either geographically or around certain product types, where consumers are just saying, no, we won't go any higher?
Well, first of all, the figures are not only good because of the raise that we were able to raise our prices, but also because of our premium brands continue to grow by 3%, and a further growth of Asia of about 4%. So in that respect, we had good volume development. With regards to our consumers, it's difficult to say at this moment of time. We see some geographies where we indeed have some difficulties in the market, which is especially in Poland. The CPI in Poland is roughly 20% up, and that meant that we had some pressure on volumes. In other parts of especially Europe, we had not that good weather over the last couple of months, so it's very difficult to see at this moment of time whether some volume developments are caused by the weather or by higher price increases.
Case, good morning. It was flagged by some analysts that you would release your earnings and guidance early if it was good news and if there was an upgrade. And indeed, that's exactly what happened yesterday. Have you now validated the slightly dangerous precedent that you're going to release early when it's good news and an upgrade, and when it comes on schedule, that means you're disappointed with your results?
No, this is very much an issue with regards to the Danish financial authorities that want you to declare to the market at the moment that you have the news. So we would love to do it in sync, if you like, but that's not allowed in Denmark.
Case, tell us about your Russian assets. A line crossing through from these results on Russian assets. Your attempt to try and seek to protect those. We know they've been handed over effectively to supporters of Vladimir Putin, supporters of the Kremlin. What does that involve, protecting those assets? Are you not at the point of having to write those down to zero?
Well, at this moment of time, it is relatively unclear for us what the situation is we are in. You've seen that there's a presidential decree that said that they temporarily transfer the management from our assets in Russia to other management, so the state property agency. On the other hand, we retain title to our shares, and that means that we are in a bit of an opaque situation at this moment of time, and we are seeking to understand further what this means in terms of next steps, but also, of course, try to protect legally our position.
Right, yeah, so that does seem very opaque, Case. So you own the shares, but you're not running day to day the business. Are you in touch with the people who've been put in charge of running the business? Are you having operational contact with them?
No, we don't have, because part of the decree was that we as management are not allowed to contact the local management, so we're not in touch with them.
Have you finalized the size of your write-down in Russia assets? We're going to move on to this, but I just want to ask, what is the size of the write-down, and is this the entire value, or what's your situation there?
Yeah, at this moment of time, we still have 5.7 billion DKK in our books.
Check for the
And at this moment of time, there is not a clear view whether maybe even able to go back to the deal we signed on the 23rd of June with the Russian company that was seen as a company that was able to be allowed, if you like, to take over our assets, because they had done that before with a Russian company. We also got some information from authorities that we were on the right track to get the permission to to sell to that company, and suddenly then on the 16th of July we were surprised with this presidential decree. So at this moment of time we keep the value in our books. There is a value, of course, for our business, and we are just waiting for the next steps to understand better in what kind of situation we're in at this moment of time.
Okay, keeping the value on the books of those Russian assets, we'll see how that plays out, of course. And we're talking about the lack of transparency from Russia on that story. Another story that we want to ask you about, Case, branding, marketing, so important for a business like yours and for your industry. And of course, you had the debacle over one of your competitors, AB InBev, signing a transgender influencer in the US, and then a backlash and a boycott from those on the right in the US. What lessons do you think the industry should learn from that branding and marketing debacle?
Well, what you see is that consumers become more
You are
and more
done.
sensitive, and in that respect, we also internally have taken steps to control even better how and what we communicate to consumers, and also understand whether some of the messages we give could polarize in the communities where we do business in. So it is about, in that respect, you could argue it's not different from the past.
Are you
Keep it with the
Casey,
team.
are you being more cautious as a result of this?
Well, we are in economies or in societies where we are deeply rooted in the different societies, and in that respect, our marketeers know what to do and what to communicate and how to trigger, if you like, the interest of the consumers. We are not in the US. The US, we understand, is a very difficult territory to market and to send your message to its consumers, because it seems to be more polarized than in many other societies. But let's keep ourselves to the territories that we can oversee, and we are at least we are scrutinizing even more our key messages to our consumers.
Yeah, really interesting to get your take on that. Kate, let me ask you about football. Given we're watching the Women's World Cup, apparently, England is playing somebody at the moment, so I'm reliably informed. Now, you have a history of sponsoring football teams, in particular thinking of the men's game, but I know you have a role in the Women's World Cup as well. It doesn't attract as much sponsorship as the men's game, a fifth of the levels we saw in Qatar. How would you expect that story to develop, Kate?
Well, we see it more from a club level than from a mondial tournament level. So we are sponsoring Liverpool already for 30 years. We are keen to support them in the future. And also there, we see strong development of women's football. And of course, that's also what we see as part of our responsibility to sponsor also them. So it is equal for us.
Case, thank you very much. Thank you for joining us. The Carlsberg CEO, Case Tart, joining us there after 8 years at the helm of the business, looking to hand over control of the business. So we thank him for that interview and for all the others that we've conducted as well. Coming up on the programme, on markets today, Norway's sovereign wealth fund returns over $140 billion in the first half, indicating it's back on track following one of the worst years in its history. We'll get a briefing on what you need to know there. Plus, some British Muslims say banks are ruining their lives with debanking policies. We will get more on that ongoing debanking story. We've done a deep dive into how this is developing. And up next,
Sea of Red. We're going to discuss the reasons behind a continued sell-off in Chinese assets. They are multiple, of course. If you have any questions on your own for our guests, send them to us on IB Plus TV Go. You can also get more from the Markets Today team on the front page of the Bloomberg UK website, or by typing T-Live Go on your terminal. This is Bloomberg.
Okay, everything changed to green. Second TP done. Well, if we'll pass 120 area, 130 will be next resistant. 44. And probably I'll be happy with that for the morning session. We'll see. Okay, look like that pound dollar is dropping, pound going stronger.
Welcome back to markets today. Happy Wednesday. We are, of course, about 40 minutes away from the cash equities open this Wednesday. Let's check in on these futures then. European futures pointing lower by 0.4%. Of course, we're weighing up what's happening in China. We'll get the details of that just in the next minute or so. The retail sales numbers coming out very strongly, of course, in the US, ready for some shoring up the view that the Fed is going to have to hold rates higher for longer. And of course, we are digesting
Still bonds.
the inflation print that came in slightly higher.
People buying bonds, so background is red.
On the GMM mark is really
Yes, it's still red. That's how
It's
it's
a really
if
interesting
yes,
GMM
getting
because the
green
news flow in
background.
Asia was incredibly negative. And you look at Asian equities and you're just going, wow, this is a risk-averse session. Everything's selling off massively. Though, Tom, despite what you think, the Australian stock market, I don't think it's a preview of the football match later on.
Got quite a big liquidity area here.
But anyway, moving on from that, risk
This
aversion
is
in the
where we
equities column.
stuck
But the
earlier.
three other columns kind of undermine that. And the first hint is actually Chinese stocks, even though all the negativity was out of China, Chinese stocks sold off less than other stock markets. FX column is not risk averse. Dollar is softening. Yields are lower. The big sources of pain recently have been China negativity and a stronger dollar and higher yields. They are easing today, and finally commodities is mixed. So this kind of hints to me that this is the misleading column, and perhaps we won't be so risk averse later on today. That is more playing catch up to the terrible session in the US on Tuesday.
Okay, Mark, I do have to pick up on the corporate front. Look, England are favourites, all right? We do not have our lead goal scorer. That is a shame. We still remain the favourites for both these teams. It will be this one. On our Bloomberg report, and what really was amazing to me is according to Bloomberg report, last weekend when the Matildas played France and beat them, of course, it was the most watched sporting event in Australia in a decade. So to your point, this has caused a lot of excitement in Australia. So I understand your sympathy for the Matildas, even if they are about to be thrashed.
57
Thank you.
could
On
be
China,
quite
back to
hard
that
as
story.
well.
Shadow Bank John Rock is reported to have said it is untrue that it's suspended making payments for all
We'll see.
products.
Maybe that's it for now.
Underscore the troubles in the property sector, where new home prices in China dropped for a second month in July. For more, let's bring in Bloomberg's China government and economy editor Jill Deesis, who has been across all of this, and there is a lot. Jill, what is the latest then on this unfolding crisis at John Rock? Does it signal that contagion is starting to ripple now across the financial sector and the property sector in China?
Hi, Tom. Yeah, so ultimately, these reports about latest statements and such, what we had heard earlier was essentially that they had missed these payments on dozens of projects. This is a product. This is a firm that's associated with, affiliated, partly owned by a bunch of larger wealth management firm within China, looking at $140 billion in assets under management. That's part of this, ultimately part of a $3 trillion trust industry within China. A lot of the concerns around what's happening do boil down to what you just said, that idea of this contagion risk that overflows from, of course, the property sector, which, together with related industries, accounts for some 20% of China's GDP and has ultimately been the biggest drag on the Chinese economy this year, as we have been discussing. A lot of that concern around contagion risk kind of comes down to, ultimately how healthy the property sector is. Some of the analysts have suggested that when we're looking at the spillover into the shadow banking industry, some of this may be related to, investment products related to retail, for example. And so that's really where a lot of our key focus is on. And I think that kind of boils down into, whether or not a lot of the policies that the government has been putting together over the past several weeks and months are actually working to help support, this property industry more largely. I mean, look at, we saw, some home prices figures earlier this morning in China that looked very bad. We've seen some investment figures over the past couple of days that were very weak. Again, all of this just kind of combines to tell us that there's a lot of worry about what's happening in the Chinese economy and how that's spilling over into potential financial risks.
And economists are watching that. They're watching the weakness in the data, Jill. They're also watching the policy response, and that's resulting in downgrades to their growth forecast for China. What's the outlook now?
Yes, Anna, so look, I think what's really important to remember about some of these economist downgrades is that we're now starting to see economists say that growth could come in this year at lower than what the government's official target of around 5% was. I mean, if you remember all the way back in March, economists were quite optimistic about the outlook for the Chinese economy this year. There was obviously a lot of expectation that consumption was going to drive things. We've seen that kind of peter out over the last few months. But I think what's really key here is JPM, for example. I mean, they were just a few months ago expecting growth of 6.4% in 2023. Now it's under, 5%. It's under 4.8. That government target that we all were thinking looks pretty conservative back in March. Now we're starting to wonder whether the government's going to make that target at all. And so I think that does have some ramifications for what the outlook looks like through the end of this year if we don't see, a turnaround, if we don't see that some of the policies that have been enacted, maybe future policies, actually start to drive a difference in the activity this year.
Jill, thanks so much. Bloomberg's China government and economy editor, Jill Deesis. Mark, let's talk about the markets in 3 minutes. And you mentioned that perhaps the stock market is a bit of an outlier, responding to yesterday's moves, the Asia session this is, responding to yesterday's moves in the US. I wonder how significant those moves were, though, in the US. Was this just more of the same, essentially noting strengths of the US consumer and therefore rates can stay higher for longer? Or was there some new dynamic? Was this just another piece of strong data out of the US? Or did it add anything new to our understanding of the strengths?
I don't think it added any new, but the price action's getting quite worrying. I think that was the 8th day in 11 that the S&P 500 has fell, and really August has turned a lot more negative in terms of the price action. There's a dynamic that is becoming global. UK shows this morning. We saw it in Canada CPI yesterday. We saw it in US retail sales yesterday. That monetary policy in most developed markets does not appear to be
It's not going anywhere.
Inflation, and inflation is proving stickier, particularly in components like shelter or wages, and that means unless we cause a further slowdown, we're going to re-accelerate the inflation bubble. And this is after we've had a whole year of almost all our markets guests wanting to buy duration. People are starting to realize that maybe that's the wrong trade, maybe it's premature. We're only at the early stages of kind of turning this aircraft carrier of thinking. But people are starting to open up to the idea that, hey, we may not be the end of the cycle for rate hikes generally. We may be too early in that theme. And that is why equity markets seem to be having a worse kind of price action. That said, I don't think the peak of the year of US stocks is in quite yet. I think we can still go higher again in the coming weeks.
Okay, that's interesting. Yeah, it's fascinating how central banks are still talking about being tough on inflation, and yet you're talking about whether we've reached the end of the disinflationary phase. These two conversations that seem at odds with each other but running in parallel and causing quite some confusion. I suppose on the UK side, if we focus in on that CPI number coming in just a little hotter than had been expected, and just like yesterday, we see this knee-jerk reaction higher in the pound, and then I wonder whether, just like yesterday, we get some in the market questioning whether that lasts because of the risks to the UK economy. What do you think is at stake here?
I think we're going to see the Bank of England hike several times more. And people have all year been trying to play for more than probably a year. I've been trying to play this idea that the Bank of England can't hike too much. If they do, they'll collapse the economy. That's probably ultimately correct. I just wonder whether the timeline will take longer to play out than we still think. So we've continuously got this timing wrong for when the economy feels the crunch. And what the dynamic we're seeing everywhere, and US retail sales shows this, is that the consumer continues to be strong and resilient. There's two dynamics to that. One is the consumer was really, really wealthy 18 months ago because they got pumped money in the stimulus, liquidity got pumped into the system, assets were at a record high. The other dynamic is a generation has learned you keep on buying the dip, you keep on spending, you use your credit card because central banks will have your back. But maybe this time they might not be able to afford to have your back. And that's why it could be very problematic, but why the downturn is coming later than many people have predicted.
Okay, thanks so much for your thoughts so far. Interesting on the Markets Live blog, Conor Cooper just pointing out that the CPI total services number in the UK actually accelerated to 7.4% in July, in contrast to the drop down that we've seen in the overall number. So that is something to certainly to catch the attention of the Bank of England. Remember, you can get up-to-date analysis and insight from Mark and the rest of the Markets Live team. NLIB Go is the function to use. Lots of analysis on there right now. And the UK CPI story, but plenty more to come.
Yeah, coming up, the UK inflation, of course, remaining higher than expected last
Dollar
month.
dropping.
To the case for the BOE to raise interest rates.
Pound just testing.
The detail and the
Oh,
analysis.
not yet. Not
Stay with us.
against the previous high made. Only move a little bit up. Dog is resistant. Come on, thank you. Such a huge drop from dollar. I don't know where the money is going because definitely not NQ. Pound as well, not really. How's the euro? Euro is the same. Hopefully not. Anything come to Europe.
Welcome back to markets today. We are 30 minutes from the cash equities open. European futures pointing lower by 0.3%.
Here are your top stories. Asian equities retreat for the fourth day on more concerns over the Chinese economy. Strong US retail sales add doubt that the Fed's inflation fight is finished. UK inflation falls, but by less than expected, adding to the case for another rate rise from the Bank of England. Plus, the world's largest owner of stocks rebounds thanks to investments in big tech. We will break down the numbers from Norway's $1.4 trillion sovereign wealth fund. Tom, what do you see on the futures?
Well, again, China is part of the mix. The inflation data out of the UK, the M90 pointing out that this really is going to add to the case for the hawks, at least on the MPC, to go higher from the Bank of England. But it's the sogginess that you're seeing coming through these equity markets. Futures pointing lower. Yesterday, of course, was a very rough session for European stocks. You had one sector that remained in the green yesterday, retail. The losses yesterday are led by the banking sector, led by basic resources and utilities. So futures, DAX futures pointing lower by about 0.3%. Here in the UK, after a very difficult, challenging session yesterday for stocks, the FTSE 100 pointing to further losses of 0.3%. And over in France, the CAC are on currently down by 0.4%. Just briefly reflecting on the session in the US where retail sales came in positive, and that good news was bad news in terms of how people were thinking about the Federal Reserve, how high they are going to have to go. The S&P, by the way, breaking back through its 50-day moving average.
You can see quite a few drop from dollar to the
Okay, so that's expectation for
very
European
cheap box
stocks, maybe
for the
something
hold
to do
support.
with yesterday's moves
And
over
keep
Wall
doing
Street,
one
and
while.
maybe then mark the Asia session to do with Wall Street yesterday. But we need to talk about what's going on in China and how that weak data that we report almost daily coming out of China, or weak news flow, how that is and isn't impacting stocks in China on a relative basis. I know this is of interest.
Yeah, absolutely. What's really interesting is Chinese assets are outperforming over the last month across the board. Bonds, it makes sense. We had a rate cut and China's confronting deflation rather than inflation. That's what we're saying. China bonds outperforming is one thing. Yuan is a haven against a stronger dollar because it's managed against the dollar. So yes, it's weakening a little bit against the dollar, but the yuan, Chinese yuan, has been one of the strongest currencies in the world over the last month. What's most interesting is even Chinese equities are outperforming, and that's really bizarre. I cannot remember the last day where this show is not focused on the horrendous China news coming through, both from the data side and the problems in the property sector, now the problems in the wealth management sector, disappointing policy. It is literally day after day after day after bad news. But the fact is, this blue line is HS Tech, this purple line is NASDAQ. You can see HS Tech still up for the past month. There's a 1 month rolling window, still up 2.3% over the past month, whereas NASDAQ is down more than 5%. The CSI 300 for the last month is only just minus 0.7%. For the last month, despite all the negative news, even though the S&P 500 is actually down 3% over the same period. So Chinese equities are extremely resilient. Why is that? Well, I was asked by Valerie Teitel this morning on her chart side, if you're pessimistic China, what's the trade? Well, we should have sold at some point in the last few years, a few months. Everyone who wants to sell the China story has sold by now. There's just not much more money to come out. Now, that doesn't mean it can rally, but it's very hard for Chinese assets to fall from here. And I think that's one dynamic. The less trite answer is, if you're still pessimistic on China from here and very bearish, and think that the real understanding of the problems are not priced, you probably want to be playing this through the second derivatives. So there's EM countries which have high trade links to China, which are priced a little bit more optimistically still. But Chinese assets are already pricing a broken economy.
Okay, that's the China story, and the perhaps surprising outperformance then relative to other markets more recently. Let's get back to the UK macro picture then, Mark. And the UK's annual inflation rate fell last month, but by less than expected, adding to the case perhaps for the Bank of England to raise interest rates once again, at least in September. What does it mean for further down the line? Let's talk Bloomberg's Lizzie Burton, our UK correspondent, who joins us with details. Lizzie, good morning. So traders holding bets steady this morning after that UK CPI print. CPI dropping, but it did come in a little more than expected. But that's because, of course, yesterday in the hot wage data, we saw higher expectations of rate rises. So they've already kind of done that move this week. What do you make of the data?
Indeed, traders seeing a peak rate of about 6% for the UK, and our economists at Bloomberg Economics reckon that would trigger a recession. You've actually had some analysts at TD Securities and Saxo Bank off the back of yesterday's jobs data seeing a half-point hike in September. But of course, we still have more jobs and inflation data before the BOE's next meeting. If you break down this latest batch of numbers, headline CPI, as you say, hasn't fallen as much as economists were expecting. Why? Well, the main driver upwards was transport costs, but the main drivers downwards were food and energy costs. So if you strip them out, core inflation has held steady even though it's expected to fall, and services inflation has actually risen to 7.4%. So it's the highest since March 1992. If you break down why, ING says that that's because of a rise in rent and airfares, so they're not too concerned. But nonetheless, overall for the Bank of England, it is a bit concerning because of, as you say, you mentioned wage growth. The concern is domestically generated inflation. That's what those jobs numbers pointed to, and hence why you've seen the pound rising slightly on these numbers. But as you say, bets for peak rates staying the same.
Okay, UK correspondent Lizzie Burden with a breakdown there of the CPI print coming through for the UK. Thank you. We'll stay on this story and bring in Parisha Simon, our rate strategist at BNP Paribas. Parisha, good morning. Thanks for joining us in the studio. Why are markets wrong to be betting the peak rate of 6% from the BOE?
Well, we don't think that they're wrong. Yes,
Revised up your forecast then?
we have not. So we're only looking for one more Bank of England rate hike, but we do see increased risk that the terminal rate may be slightly higher, especially given the latest data that we've had. I think the biggest surprise was the data that we had yesterday on the labour market. As Lizzie mentioned earlier, there's some airfares tick up, which can be a bit volatile in the inflation data. And there was still some improvement on the food prices as well, which is, of course, a key component that filters through to consumers' inflation expectations. But I think on the whole, yes, the Bank of England will need to do more. The markets were right to reprice expectations, but we don't necessarily think that that will be delivered. Certainly not necessarily up to the 6% level the markets are pricing.
So are you sceptical that we could see something like a 50 basis point hike in September? Does the data look as if it justifies that? We spoke to Saxo Bank just yesterday on the programme, and as Lizzie was saying, they are now suggesting we could see a 50 basis point move again in September, but other voices saying no, that the Labour story is actually moderating, and there's no need for that kind of move.
Yes, I think a 50 basis point is still a little premature. Remember that we already saw the Bank of England deliver 25 basis points at their last meeting, stepping down from that 50 basis points before. So I do think that hurdle to go at 50 basis points again is a little high. We have seen some moderation in inflation. We have seen some moderate improvement, some glimmers of hope, should we say, in some labour market aspects. But clearly the Bank of England still need to do more. I think, though, it's still hard for the pound to really respond to this better data and higher terminal rates, though. Yes, we've seen a little bit of a push up in the pound in response to the data, but ultimately either the UK will have an inflation problem and further hikes needed, but ultimately we could see...
MotiveWave is an easy-to-use, full-featured professional charting, analysis, and trading platform. Whether you're new to trading or an experienced trader, MotiveWave was built for you, the individual trader. With support for over 35 different brokers and data service providers, and allows you to connect to multiple feeds and accounts. Also specializing in advanced strategy analysis tools, MotiveWave has the most advanced Elliott Wave and Fibonacci tools available, including a variety of manual, semi-automatic, and automatic Elliott Wave features, built-in Fibonacci tools, and wave ratio analysis. Additional advanced charting strategies like harmonics, Gartley, and Gann tools, as well as volume and order flow analysis tools like volume footprint, TPO, and volume profile, are also available to help you find key points for entering and exiting the market. There are tons of ways to place and manage orders and open positions in MotiveWave. To name two, you can place orders directly from the price axis with a single click, or use the trade panel for more complex order management, including entry and exit strategies. With over 275 built-in indicators, as well as over 30 automated strategies out of the box, you're sure to find what you're looking for. Modify, test, and deploy these with a few simple clicks, or build your own custom indicators and strategies using our free Java SDK. Trade simulation and full strategy backtesting, optimization, walk-forward testing, and reporting allow you to test your trading ideas and enter the market with confidence. Advanced replay mode features allow you to validate a market theory, test an automated strategy, or practice your Elliott wave counts against historical data. In replay mode, you can place simulated trades as well as link multiple charts to watch them all step forward together. Use the intelligent pattern matching algorithm scanners to look for trading opportunities across a wide range of instruments and bar sizes. Ready to get started? Take our 14-day free trial and test out everything Motive Wave has to offer.
And given that we're now in a more normalised world for policy rates, there are alternative assets for these investors to buy.
What's your favourite cross to play that dollar weakness?
So we do like fading the dollar against NOK at the moment. That's a tactical view of ours, but we do think that there are supportive upside fundamentals for the NOK itself, but also that dollar weaker view that we have, especially in this environment where risk premium is suggesting it's attractive to be adding risk. And given the positioning is like that, we think at least tactically it makes sense to be adding risk here, and that's why we like the dollar NOK short.
Patricia, how are you factoring in the risk of a resurgence in inflation? We talked about the sort of competing stories that are being discussed around inflation. Central banks still trying to talk tough, but at the same time, we've seen the disinflationary forces actually in markets in recent months, bringing inflation down, certainly in some developed markets, over in the US notably. Are you thinking about risks that inflation will accelerate?
I think we always have to consider that
Trading
risk.
stop on
Markets
the 3
have been
minutes as
surprised in
well.
that direction for much of the past year, and so we definitely need to consider that. And I think when we look at the rates markets, there is an increasing premium being priced in at the back end. We're seeing inflation break-evens widen out to respond to this idea that maybe a softer landing will see inflation tick up again. But for us, we do think that the data in the US will eventually decelerate. We're seeing some increasing signs of that in the US, including on the services inflation side. We are seeing the labour market beginning to cool as well. And so all in all, we do think the data will prevent the Fed from needing to deliver further tightening.
Patricia, thank you very much. Thanks for joining us. Patricia Sainby, rates strategist at BNP Paribas, with a view on gilts and the Fed and beyond. Now, coming up on the programme, your stocks to watch in focus, including Carlsberg, which just announced a 1 billion Danish kroner buyback. We got that in the last 48 hours or so from the business. We spoke to the CEO earlier, gave us more insight on the Russia business, which were fascinating. We'll get to the latest on that stock shortly. This is Bloomberg.
Okay, close my longs. A little bit late for the shot, which I need to wait now. So some nice entry here at the top.
markets today. 15 minutes until the start of cash equity trading on this Wednesday morning. And the futures picture points lower, reflecting the US session of yesterday, really. Let's look at some of the top red stories on the Bloomberg terminal then this morning. European natural gas futures spiked yesterday for the second time in less than a week. That's as tensions run high over the possibility of strikes in Australia that could severely tighten the global market for liquefied natural gas. Discussions between union officials and one of the two companies operating the affected facilities yielded no firm outcome to the labour disputes. The philanthropic organisation that controls most of the $25 billion in assets in George Soros' family office is set to end most of its operations in the European Union. As part of a retrenchment under new leadership, the Open Society Foundation told Bloomberg it's introducing a new operating model. The changes also come as the foundation cuts headcount by some 40%. Vietnamese EV maker VinFast soared in its first day of trading in New York after going public in a SPAC deal. Shares gained 255%, giving VinFast a bigger market cap than GM, Ford, and BMW. However, just 1.3 million shares are available for trading, with most locked up by the company's founder and his family. BlackRock is among companies bracing for tighter oversight in the United States following a congressional inquiry into investments in Chinese companies deemed to be national security threats. The Biden administration signed an executive order last week limiting U.S. investments in China in key technology industries. Vanguard, Fidelity, and AWS also manage funds with investments in China. Some of which are the
Let's check in on what you need to know heading into the open. Sam Monstead joins us from our Markets Today blog. And Sam, we're still going through and weighing up the implications of this retail data and some earnings coming through from some of the big retailers in the US. How do we think about that leading into the session?
I think so. Retail sales data from the US yesterday, very resilient. That is, we've seen that kind of broadly everywhere. Consumers have remained very resilient. Some of that is inflation pushing through to food prices, so the figures maybe are being influenced a little bit by that. Today we've got Target coming up. We have Home Depot yesterday. DIY spending actually appears to have held up pretty well. But Target makes an enormous amount of its money from this area of electronic goods and TVs, fridges, white goods. That's an area where we have seen a bit of a squeeze, where people are holding back on those purchases. So it'll be interesting to see how Target will reset expectations today.
Sam, for most of the last weeks, or in fact most of the last couple of years, it's been the property sector we've been super worried about in China. And now, finally, it's spread to maybe an even more worrying problem, the wealth management sector. What's your latest take on that?
Well, my latest take on it, I always go to Sophia Costa on the Markets Today blog for anything China. And she was telling me this morning, and I think this sounds right, as you've kind of said many times, the news out of China is really negative. The sentiment there is really poor. This story adds to that. But she was saying to me that some of this appears to be linked to the property sector and the weakness there as well, and spreading even further into the economy. But at the moment, Chinese assets still not seeing that big reaction that I think everybody was expecting to see, given how bad the sentiment is.
And Sam, let's get your thoughts on another market that is influenced by things that happen far and wide and has far-reaching implications when it moves, and that is the LNG market. And what we're seeing reflected in European gas prices, those prices jumping once again, all to do with the Australian labour market.
Yeah, it is, and actually, again, this is one of those incremental stories in the inflation picture that not gets lost, but it has been kind of forgotten about a little bit because energy prices have come down so much over the past year. We saw that in the UK inflation data today. This is another worrying sign because this is a strike action in Australia, probably will reach a conclusion at some point, but how much damage gets done to the LNG price in the meantime, we should have to see.
Sam, thanks very much. Sam Monstead from our Markets Today blog. You can find that blog by going to the Bloomberg UK website, and you can click through to the blog from there, or you can type TMID go on the Bloomberg. Now let's get your thoughts on what Joe Eason from our equities team joins us. And Joe, I know that you were watching as those Carlsberg, the early release of those Carlsberg numbers hit the Bloomberg terminal yesterday, so you wonder if some of that's already in the price. But we've got some really interesting lines this morning on Russia from the business. What stood out to you?
Absolutely, and so we did get a chunk of this earnings report yesterday, as you say, with some of that guidance coming during the market hours from Carlsberg. They've raised their guidance once again, continuing an impressive run of them pushing up their earnings outlook, and that one did please investors, with the stock rising about 2% yesterday, as we can see from the screen. But this morning, they've also given us some fresh lines in terms of the new share buyback. That's worth around £1 billion Danish kroner, which translates to around $150 million. And their 1H earnings actually slightly better than expected as well. If we see from a year-to-date chart, I brought it up against the big rival Heineken. We can see that Heineken sank following their recent guidance when they said that consumers were cutting back on beer due to the higher prices. We don't seem to be seeing that from Carlsberg today or yesterday in that report, and that seems to be a relief, which should potentially help the stock again today, Anna.
And Joe, you're also looking at BME, which is a London-listed retail business.
That's right, Tom. So B&M, ticker BME, they could potentially be bidding for some of the collapsed Wilko stores, which is the UK discount that's gone into administration. Now, this stock has risen 2% yesterday, about 5% over the past couple of days in terms of BME stock. Poundland is another potential bidder for this, so it's the two companies potentially battling it out, and it could give them around 300 Wilko stores that will be vacant. Analysts at Shore Capital saying that they should really be bidding for the ones that aren't based on the high street, that are outside of the main shopping streets, given they haven't seen the same decline in footfall since the pandemic. As we can see from the screen, a lot of positivity on B&M shares. So FTSE 100 member with around 11 buy analysts and only 2 sells, expected to be a bit more resilient during the recession, given the discount offering. So that's one to watch today, Tom.
Joe, good morning. Another couple of UK earnings, Aviva and Admiral. What were the stories there?
So it's a bit of a picture on those two, Mark, bit of a mixed one. In terms of Aviva, they had surprise weakness in their insurance. This is the largest life insurance provider in the UK, and they're actually missing one of their key lines, which is the combined ratio, a key profit number for insurers. However, their asset management division holding up well. We saw Legal & General yesterday reporting a slump in assets, and it doesn't look as bad over at Aviva. That looks pretty positive. Meanwhile, Admiral, now this is much more on the personal lines, car insurance, home insurance, that kind of thing. They're managing to push up their prices and are not seeing a decline in demand for their insurance products, which does look to be positive. We can see I've brought those two stocks up here, Aviva and Admiral. Aviva has underperformed, but that's mostly due to the outflows in their asset management arm, and that looks positive today. Not as bad, as I say, as what we saw from Legal & General yesterday.
Joe, thanks very much. Our equity supports Joe Easton with some of the stocks that could be on the move. We'll certainly get Joe back. We'll return to those themes. We'll check in on those as the market's opening around 8 minutes' time. So, well, just minutes then until the start of the European equity trading session. And it does look as if we are playing yesterday's story a little bit here in Europe. European futures are weaker. The retail sales story not confidence in risk assets stateside yesterday. I wonder what you expect from the session ahead, given, actually, you haven't mentioned, we've got important data coming out from the US, and the minutes, of course, of US futures fairly flat.
Yeah, we've got some big data, and you said the Fed minutes, so there will be big factors later on. But I do think it's really interesting, especially given we have the hot CPI print, and that's been the kind of story, is that yields are softer today. US yields have come down a lot. There's quite a turnaround in the late US session, and that also means the dollar is slightly softer today. I do not want to dramatize this, but the theme of August has been risk aversion amid the fact that we've had a relentlessly climbing dollar and higher yields and a very negative China story. The negative China story remains, but it looks like we're at least getting a pause in the dollar strength and higher yield story.
I'm glad you mentioned fixed income over in the US. So the 10-year 417, and note coming through, a story coming through from Steve Major, of course, of HSBC, saying that now is a good entry point, Mark, for the 10-year. The yield on the 10-year is at the top end of its range.
Look, Stephen Major is the most articulate Treasuries bull on the street, but he will always be a Treasuries bull. And so what he'll do is give you the most compelling argument for Treasuries, but he almost always thinks it's a good entry point. He has a very good framework. I value his work an awful lot, but I can't say it's a surprise he thinks it's a good entry point for Treasuries.
Okay, pushing back on that call there from Stephen Major of HSBC. Mark, of course, thank you for walking through some of the key market themes for us this hour. You'll be back, of course, tomorrow with the analysis. As we look at European futures pointing low by 0.3%, US futures are flat after the S&P crossed through its 50-day moving average for the first time since March. The open is next. Stay with us. This is Bloomberg.
Okay, London is opening in 2 minutes.
A few minutes ago until the start of Catch Equities trading. Welcome back to Markets Today. I'm Anna Edwards in London with Tom McKenzie.
And here are your top stories. Asian equities retreat for a fourth day on more concerns over China's economy. Strong US retail sales, meanwhile, adding doubt that the Fed's inflation fight is indeed finished. UK inflation falls, but by less than expected, as the cost of travel and holidays climb. Traders hold BOE bets steady. Plus, the world's largest owner of stocks rebounds thanks to investments in big tech. We will break down the numbers from Norway's $1.4 trillion sovereign wealth fund. So, Anna, we're back in UK territory with the inflation print coming in slightly stronger than expected, and China negative again in terms of the news flow.
Yeah, absolutely. As Mark was telling us at the end of the last hour, China theme, the negativity around China still with us very much in markets, and that's certainly something that's been weighing on the Asian session. We've got MSCI Asia Pacific down by more than 1% as we head into the European session. Is that really just yesterday's story, though, reflecting Wall Street and the sell-off we saw in risk assets and stocks as a result of that retail sales picture? Forward-looking, US futures look entirely flat, actually. So you can see S&P futures are flat this morning. The pound is the 127.27, up 0.2%. It goes higher once again in a sort of knee-jerk response to that slightly higher than anticipated CPI print. It has stepped down a lot from last month, but still a little higher than expected. And Tom, I also mentioned natural gas prices, because once again we're being sort of whipsawed by that story. And this has a lot to do with the Australian labour market, of course, and whether we'll see resolution to disputes there. A very globalised picture for gas markets right now. Tom, what do you see in futures?
Yeah, and a reminder that that energy complex could provide something of a pushback to this disinflationary theme that we've seen coming through. The FTSE 100 futures pulling lower by 0.2% after the selling of yesterday. DAX futures lower by 33 points, and over in France, losses of 0.3% flagged by this futures.
Okay, so futures points lower, expecting to see a bit of weakness at the start of the European trading day. We get the FTSE 100 then down by just a fraction, as it is the first out of the gates this morning. Here's the move in the pound we're talking about, up by 0.2%. Another reminder this morning of the pressures on the Bank of England, on the thinking around how many rate hikes there'll be from here. It seems that markets have left their expectations of how many hikes we get unchanged, but that's after they stepped those expectations up yesterday on the back of the strong wages data. So we're waiting to see what happens on the gilt market story as gilts open. There you go. I just saw there's the 30-year gilt just popping into the GMM, the 2-year. We are seeing those yields rise. And what's interesting actually is that the yields are rising on UK gilts when they're not rising elsewhere. As Mark was pointing out at the end of the last hour, we're getting a bit of a relief from August's theme, which has been around the stronger dollar and higher yields. That relief coming in the US 2-year, you can see there, and broadly across treasuries. And that applies to the rest of the European rate space, but not to the UK, where we seem to be going in our own direction as a result of what we saw on that inflation rate on earlier on today.
Yeah, and selling across the main sectors so far this morning. I'll point out technology currently down as a sector 0.5%, even if yields start to moderate somewhat across the US Treasury curve. Basic resources now down a full 1%. Of course, you can tie that to the property sector in China and expectations that there's going to be less demand for the likes of iron ore and copper on the back of a second straight month of falling sales. And again, there's concerns just percolating through the real estate market and the linkages to the broader financial system of China. Currently, that sector, basic resources down a full 1%. Energy also taking a bit of a hit. Of course, you have seen some upside for oil over the last 30 days or so, but currently as a sector down 0.6%. Industrial is also taking a bit of a hit, down 5 cents, and financial services by 0.5%. Just one sector so far in the green, reflecting what we saw yesterday. It was retail, the only sector that remained in positive territory yesterday. And so far, the first few seconds, retail is gaining just 0.1%.
Okay, so that's what we see on the sector breakdown. Let's get to what's happening on gilt markets, and actually things taking a little while to settle down this morning in terms of the gilt market trade. Got a yield on the 2-year 5.085. It seems those yields coming down a little bit now. Sam Munster joins us from our Markets Today blog, and he's been pouring over all of the details on that CPI print. I suppose in a sense there was something for everybody in CPI, wasn't there? There was the big step down at the headline level, but the number was a little bit higher than the market had expected.
Yeah, I think that refrain is almost all UK data at the moment. So there's something for everyone. There's something for the bulls. There's something for the bears. If you were going into this expecting to see inflation come down further, it didn't happen. So actually, one thing that's interesting, I suppose, is that the wage growth yesterday seems to have taken a bit of the air out of today's print. You're just saying gilt markets not moving a huge amount. They did move quite a lot yesterday. Stocks got hit very hard. It feels like that kind of took away some of the surprise from the CPI, and because it was only slightly higher than expected. We'd had actually warned a couple of times on the blog. January, we did have a downside surprise on inflation, then 5 in a row that were hotter than expected, and that's now happened again.
That's why we need to read the blog. We do. That's why the audience needs to read the blog, because you preview some of these things and you have the finger on the pulse of how some of these things may work through the markets in terms of macro data as well. When it comes to you talk about the mixed bag in the UK, it's a mixed bag in the US as well. And we know that the FOMC now on the Fed are increasingly divided. We have the minutes out later today. What is the kind of forecast? How are we expecting those divisions to kind of play out?
I think we talked earlier about retail sales, still very resilient. So that has to feed into the picture again. These are the minutes from the last meeting. I think what we're expecting to see is a split. It's certainly in terms of how long they can pause for, if they can pause at all. I think the debate is just going to continue there for quite a long time. It's the picture you're seeing with a lot of central banks at the moment. They're just waiting, because they are so data dependent. They are waiting for that data to all come in line with each other so that they can finally move in the direction of pause.
Market's still pricing in a pause from the Fed. Jackson Hole next week.
Yeah.
Get a speech, of course, from Jay Powell. See if that clarifies the next steps and the next direction of travel for the Fed. Sam, I said thank you from our Markets Today blog. Of course, you get more from Sam and the team on the front page of the Bloomberg UK website, or by typing T-Live Go on the terminal. Let's get to some of the individual stocks and equities on the move then with Joe Easton. Joe, flag the number for us leading in to the session. Carlsberg was part of the mix there. What else is jumping out to you?
So Carlsberg, first of all, coming down around 2%, pretty much giving up all of that gain that we saw yesterday. Quite interesting, given the guidance was upgraded during yesterday's session. We've got a share buyback today that we didn't know about. I'll have to read into some analyst reports there and see what the reaction is to that. Meanwhile, the UK insurers, they look pretty mixed. Aviva seeing some outflows over in its asset management business, but not as bad as what we saw from Legal & General. So that one up around 1%. Admiral, meanwhile, outperforming, given they are managing to push up some of their pricing on their home insurance, also motor insurance as well. So that seems to be positive. Ticking even further higher on the screen there, now up around 3%. Now, Demont, this is one of the biggest makers of hearing aids in the world, around a $10 billion company over in Copenhagen. They're upgrading their guidance this morning. That's pushing a bunch of stocks higher in that sector, including GM Store Nord, their big peer there. So that one doing pretty well over in Copenhagen. We're going to flip over and have a look at these UK stocks following that data that Sam Umstead was discussing. Now, most of those actually coming down into the red. So Lloyds down 0.3%, the most exposed UK lender, of course, with yields coming slightly higher, as Anna was mentioning a moment ago. We're just seeing land securities as well. Real estate really exposed to the higher interest rates, of course. That one down around the same amount. Now, Persimmon, the big home builder stock, this one obviously very dependent on mortgage rates as well, but there is an analyst report saying that this company may actually drop out of the FTSE 100. That's according to analysts over at Numis, who say that their decline could see them drop out of the main UK index. Next, pretty much unchanged, all of those stocks getting yesterday in terms of UK retail following Marks and Spencer's surprise guidance upgrade. So some of the positivity now priced in there, and that stock pretty much unchanged, down around 0.1%. Then we're going to flip over and look at my favourite screen, the ratings changes. So we have 3 downgrades at the top. Segro, they have cut at Barclays, who say that the company has highlighted customers in terms of warehouse customers. This is a real estate firm. They are slowing their decisions on renting out warehouses in the UK due to the economy declining. That one down 1%. And Antofagasta, also in London, this is a copper miner. really dependent on the copper price coming back up. We're not seeing that at the moment, and that one gets a downgrade over at RBC. And then in terms of another downgrade, Telefonica, oh, I can't get my words out today. Telefonica Deutschland got there in the end. Perfect. And that one downgraded at JP Morgan. This stock fell off the cliff a couple of weeks ago after news that O2 is potentially losing market share over in Germany with Vodafone coming in and new packs there. Meanwhile, Trainline, getting another one wrong. Those ones are getting new buy over at Shaw. That one is on track, according to Shaw, to beat expectations. They provided the pun, not me. Shout out to them for that one.
Joe, Lisa, thank you very much indeed for some of the stocks to watch, some of the movers this morning, this Wednesday morning. Let's check in on what's happening. A line crossing on the semiconductor space, the chip space coming through from Intel. We had reported on this, so they have now scrapped their deal, what was going to be a deal to take over a semiconductor maker in Israel. It's going to be a $5.4 billion acquisition. This is because Chinese regulators have not approved the deal in time for the deadline. You can have a look, of course, at the geopolitics between Washington and Beijing for maybe some of the reasons behind that. This, though, is consequential for Intel because they are in a multi-year restructuring campaign under Pat Gelsinger to try to make up for some of the losses in terms of building out some of the more sophisticated chips. They were hoping this acquisition would help them build out foundries to kind of compete, at least on some level, with the likes of TSMC. This will be a bit of setback on that basis. But in terms of how this needs to stop when the trading starts, then the US session questionable given that the stock has kind of reworked or worked through some of this on expectations at the time of the previous deal. So that's why Intel giving up its deal to take over this Israeli chip.
Yeah, there have been doubts about whether this would go through. And sticking with China themes then, Tom, Chinese shadow bank Zhongrong is reported to have said it's untrue it's suspended making payments for all its products. The firm's liquidity challenges underscore troubles in the property sector, where new home prices in China dropped for a second month in the month of July. Let's bring in Bloomberg China government and economy editor Jill Deaton. Jill, this was just the latest in a number of negative stories surrounding China that we've been covering at the beginning of the week. But what is the latest and what's unfolding at Zhongrong? What is it telling us? What does it signal about contagion in the Chinese economy?
Yeah, thanks, Anna. I think, first of all, I want to point out, I was reading through that securities daily report on Zhongrong, putting out the statements. I want to say it says they're suspending making payments for all of their products. Though, obviously, you reported that on some of the products, they haven't been making these payments, right? So I think that still kind of underlines that there are some pretty serious concerns going on with, not just, the shadow making company, but, some broader concerns within the sector, and whether that means that there's contagion risks that are sort of spilling over from the property sector, as you've been reporting all week. The big concern here is that when you're looking at what benefits in China, like how many of these investment products are actually tied to the broader real estate sector, which of course, as we know, has been experiencing tremendous amount of turmoil and crisis over the last several months, really years. And I think that continues to be a concern going forward. So ultimately, this does still tell some financial risks to China that we're keeping a very clear close eye on at this point.
And meanwhile, Jill, we're getting downgrades in terms of the growth forecasts from the likes of JP Morgan. What's interesting is not necessarily that they're downgrading, although they have downgraded from a pretty high number at the start of this year, but they are now expecting China and the growth there to come in under and below the target that the government has set itself. What is the outlook now as we weigh up the leverage in this economy and the risks around property and the financial sector?
Yes, Tom, I think that's exactly right. The concern now is shifting to this idea that China could undershoot its growth target. I mean, if you look at the JP Morgan downgrade, for example, they're looking at 4.8% growth for 2023. This is an investment bank that was saying 6.4% growth was what they were expecting out of China in 2023 just a month ago. So this does, I think, have some some implications for if this recovery does not get back on track, if supportive measures don't come through that are able to address these underlying issues of demand and confidence in the economy, if some of these issues within the property sector aren't resolved, does that ultimately spell some serious trouble for the growth outlook for the Chinese economy going forward? That's, I think, we're starting to see more of that conversation bubble up now around this point.
Okay, so reporting from Jill Deaton and the team on the ground in Hong Kong and China is essential reading right now as we monitor this economy. Thank you, Jill, of course, for the latest on what is happening in China. Stay with us for more. We're going to get more analysis, more market analysis on this inflation data out of the UK, and of course the next steps for the Fed ahead of those FOMC minutes. This is the
Okay, I'm in short on the 1.8. And the stop loss, I need to make it like 12 points. As I don't wanna 30. First TP done. Evident lines on all of the indices changed to red.
Right now, inflation is coming down. We've made some progress, some good progress. I feel good about that. It's still too high. The good news is the labor market has remained very strong, but it's a little bit of a double-edged sword because the question in my mind is, have we done enough to actually get inflation all the way back down to our 2% mark, or do we have to do more?
Okay, that was Minneapolis President Neil Kashkari speaking yesterday about the US inflation threat, indicating the battle is not over yet. We're talking about a double-edged sword. Let's bring in now for more takes on this. Hey, Barkay, head of investments at Atmos Investments, on the macro picture, on these central banks, and how to position this as well. Hey, thanks for joining us in the studio. Let's start with that double-edged sword then. We saw the retail sales data coming out in the US. We talked about how strong that was. Does this add to the consensus view, well, some of the consensus view, that we're going to get a soft landing in the US, or does it sharpen the pause reports in the Fed?
So we're
Yeah, well, I think
ranging.
the position in the US is very different to what we're seeing in the UK. We've seen a much more normal trajectory in terms of the way that the rate cycle has been working. Obviously, what the Fed are acutely aware of is they want wage
So
inflation
far, can we
spiraling into
go
this
and check?
second order effect and feeding through to
We
consumption.
didn't grab the
I think
liquidity,
we're starting to see
even
tentative
from the
signs
top
that
or
we
the
are
bottom of
very close to
Sydney.
terminal rates in the US, and certainly we can see again compared to the UK
It's
that the rate
quite
expectations in the yield curve are
big support
substantially below what we're seeing in the UK, for example, at the moment.
And so what are you focused on when it comes to the US story right now? Hey, is it around the inflation fight and rates staying higher for longer? Or is it around the disinflation impulse continuing? Or is it a resurgence in inflation? Where's your focus?
Yes, I think it's all about peak rates, because ultimately that's the thing that's going to feed into the markets. Obviously, the US stock market is much longer duration, much higher tech component, and that's obviously why we've seen big large cap tech performing very well, but we haven't really seen it until a few weeks ago. And obviously, that's retrenched now. We haven't seen it feed through to a broader range of smaller tech. So I think that's what everybody's focused on at the moment. Do we see a pullback? What does that do to treasury yields? And how does that feed into long duration assets like tech companies?
Does that call on peak rates from the Fed then pull you into other sectors in the US? Are you attracted by some of the valuation propositions beyond tech?
Yeah, so I think the good thing about the US is if you're positive in the rate cycle and you think rates are going to start falling, you do have the long duration assets in the US. And
Close
in the UK
it.
as well, if you get it wrong and it goes the other way, it's still a reserve currency, and I don't believe that the dollar is dead. And I think if you do see some sort of pullback, and of course, what we have to be careful of at the moment with rates rising, particularly in the UK at quite alarming rates, is it doesn't trigger some sort of black swan event. You know, if we do see default rates pick up, watching financial companies' results in particular, if we do see defaults pick up, you can get unexpected things happening when we move into environments that we haven't seen for 20 plus years.
Yes, and if we see something break, where will it break? Is a question that we ask a lot of people and we spend a lot of time thinking about. Let me ask you about the UK, because we've got the CPI print out this morning, and as we were talking with our colleague Sam earlier, there was kind of something in it for everybody, because after the big repricing we saw yesterday on the wage data, the CPI print, it did show that big drop as expected, but it was a bit hotter than expected. How are you interpreting the UK story?
Yeah, so still of the view that some of the rate increases that we're seeing at the moment are policy errors. Rate increases have a latent impact.
So do you think the ones we've seen already are policy errors?
Yeah, I think that they're errors, and obviously the market is now predicting further tightening. We see that through the yield curve. Obviously, it tightens anyway. Dynamics of the UK mortgage market, particularly sensitive around the 2-year mark, because we've got 2-year discounted variable rate, 2-year fixed rate mortgages are the majority of mortgages in the UK. We're just starting to see that feed through. At the moment, 80% of mortgages will be coming up for renewal in the next 18 months. So you see the immediate impact of wage inflation coming through, but the rate increases haven't occurred on a latent basis.
Okay. Your thing reviews on China then, because counterintuitive for money is your positive call on Chinese equities. Where are you seeing the value there? What is the rationale for wanting to add exposure to China?
Yeah, well, we were just discussing before we came on here. What we're seeing in China is we're seeing actually underlying companies performing generally better than expectations, even though the economic data is poor. But the market is acting on a uniform basis to macro level data at the moment.
You wouldn't buy the index, you buy individual companies.
Yeah, and I think there's pockets of value in China at the moment. Chinese companies very adaptable, and of course what we're seeing in China is very different to what we're seeing here. We're actually seeing problems with deflation in China, which is kind of counterintuitive, because they didn't give the sugar rush stimulus in lockdown that we are having to unwind now. So on a relative value basis, China looks great. It's very underrepresented in global market indices and in ETFs and so on. And again, usually the best time to invest is when you see the fundamentals and companies not being rewarded through share prices.
Okay, so you say underrepresented in global sort of baskets, but at the same time it is represented to some extent. I mean, we saw this story yesterday about BlackRock and other fund managers are bracing for tighter oversight following a congressional probe that is basically looking at their ownership of some Chinese companies. Now, maybe taking a company by company approach is the answer then, because this is specifically about those that are in the eyes of American authorities, national security threats. But are you concerned that this could provide another leg down for Chinese stocks?
Yeah,
Oh yeah, the queue is very slow today.
We haven't seen Chinese companies in aggregate moving up on the back of good news. We just see them continually reacting to bad macro data. But again, that presents the opportunity. I mean, of course, if we get further tightening and if there's further sort of sanction type arrangements put in place for Chinese companies, then all bets are off. But that is more than priced into share prices in China now, I would say.
Okay, hey, really nice to speak to you. Good to talk this morning. Hey, Bathgate, Head of Investments at Atomos Investments. Coming up on the programme, Norway Sovereign Wealth Fund returns over $140 billion in the first half, indicating it's back on track following one of the worst years in its history. It has a lot to do with US big tech, picking up on our last conversation. Well, naturally, this is big tech.
The main trend is a short, temporary trend is a long. This is 1% retracement. Don't look too bullish. I'm long on oil and I'm short on gold. Well,
This is Markets Today, 24 minutes into our trading session here in Europe for this Wednesday, and you can see a very flat picture actually coming through after earlier weakness on European stocks. US futures look flat to positive, with NASDAQ futures actually up by 0.2%. Now, Norway's $1.4 trillion sovereign wealth fund returned 10% in the first half of this year after one of its worst years in history. The bank is the world's biggest owner of publicly traded stocks and holds over 9,000 companies in its portfolio. For more, let's bring in Bloomberg's Oslo bureau chief, Stephen Trelaw, who can give us details here. And clearly, this is a business, this is an investor that looms huge, looms large over many markets. What drove the returns then in the first half?
So returns were driven by a 40% jump in the equity portfolio, and technology stocks were particularly strong in that sector. They delivered a return of just under 40% after a poor year in 2022. So they're benefiting from a strong demand for AI solutions and semiconductor makers. So we're seeing that feed through now, and of course their largest holdings are in
gold, my first TP, it's almost there.
Amazon and Microsoft. So they're really benefiting from this push into technology stocks we've seen so far this year. On the downside, we saw bonds fairly weak for the half, only up 2%, and real estate and unlisted renewable energy infrastructure were both poor performers.
Yeah, and yet they would have performed better, wouldn't they, if they just bought the benchmark? Why do they underperform the benchmark? What were some of the other wrinkles in the mix?
Well, stocks outperformed there, which makes up a large part of their portfolio. But
First
it
TP
was
on gold done.
unlisted property and the renewable energy infrastructure which really pulled them down. They're performing below expectations at the moment, given that the market is having a bit of a pullback. It's a fairly small part of their portfolio, but it's feeding through pretty strongly, as we can see. As they get more and more money from the oil and gas riches of Norway's North Sea, we should expect to see more investments in this area, and maybe that might see a good time to invest in there when the returns start to improve.
Okay, Oslo Bureau Chief Stephen Trelaw, thank you very much indeed. Interesting to see the CEO, the head of that bank, speaking to the Financial Times and critiquing the UK government's apparent, what looks like at least, wallback from some of its green targets. Later in the day, Deutsche Bank Investment Management CEO Nicolai Tangent will be joining Bloomberg TV for an interview at 1:15 UK time, so do tune in for that.
Coming up, we will take a deep dive into a really fascinating story as it unfolds in UK banking. Some British Muslims have told Bloomberg their bank accounts have been unexpectedly closed. We will bring you more on this debanking controversy, the theme, of course, highlighted recently prominently by Nigel Farage. We'll get into a different angle on this story, though. That's next. This is Bloomberg.
151. This is my first piano. Okay, pound get some quite big selling pressure.
Good morning, Colton. How are you? I'm
Good
waking
morning,
up
Mr.
super late
Texas.
again.
Oh, that's okay.
Are you there?
Yeah, I'm here. Can you hear me?
Colton, can you hear me?
Yeah, I can hear you. Hello, hello.
Okay. Yeah, I hear you. So
Morning.
I'm late. I haven't looked at the charts. I just saw the time.
It's quite
I think
boring session.
everything already happened, I'm assuming.
No, nothing happened. It's very boring session. I took some small profits on some shorts. Now I am in long, but mostly it's like scalping trades. Alexa, stop. Alexa, stop. And I'm shorting the gold, which took some profits already, and I am long on oil. So we'll see. For us to go long, we need to pass the 37. This is 61%, 61.8% of the retracement from the yesterday swing. I don't want to see if that happened or not.
The 37 on NQ?
Yes, 15137.
Oh, okay. Let me open up. Okay, so you were gonna show me something of like the top.
It's generally actually if you'll go to our indicator and when you'll see the areas where you've got a lot of signals, it's mean we are in a chop zone. This is what I doing quite often when it's showing me like this is overnight session. Oh, this was the yesterday. And you can have a look very well here. We didn't go out from this area uh, for almost 4 hours. And the best for me to see that we are in a chop zone is always go, check, draw two lines, and as we cannot leave that area, as I'm not touching any trade, most of the time you will be seeing that the POC is growing up there. And
So
now,
I only have the indicators of the 4 hour, the algo, the market structure, and
yeah.
that's all I have. They're the only ones that he's given me. And then of course you are what is it called the boxes.
And yes, the boxes. But this is not like a, this is the algo, yeah. But I remove the candles. I don't want to see them. But you can do as well here on a normal chart where you don't have any indicators.
Hmm.
And you
Okay.
just going yesterday.
Okay, let me look at yesterday. Let me take off. Let me just put the algo and just the algo. Why don't I have where are my boxes?
It was retail that was the only sector in the green on a day of losses yesterday, and retail posting additional gains today. Some of the earnings coming more positive in the forecast. We had an upgrade for
Oh, okay. I hate that my boxes sometimes go to another
down after the gains that we saw
go to
yesterday.
the bottom.
Yeah, you can drag them by the mistake, doing like holding and going like that. You'll drag them there.
Move over. 15 paint above. Okay. So I'm gonna keep the three that I own because I've been doing well, like awesomely well with those three things, and going off market structure,
Mm-hmm.
looking at where the line is, and like for example, for the most part, it looks like, let me see, where's the line? On a normal, what I would do would be, of course, look at where the VWAP is. We're above the VWAP, so that's the long for me. First thing I look at, and then the market structure. We have it looks like a long on the market structure. But and then so I just look for the longs, like the entry for a long.
Yeah, that's
And
a
right now,
quite good
that's what
one.
I've been doing. And then so I would just be waiting for on his indicator, the reversal is 15113, and that's all I have. So we passed the 37 or 30 what?
That's a quite nice breakout.
Or a few weeks.
Mm-hmm.
And then what typically happens is that they're unable to access their money.
And
And it means
yes,
that
we are at
their direct
38,
debits will bounce
39
and they
now.
can't pay their bills. And that was what happened with Akil Ahmed from Luton, who's a former postman. And he was unable to access his bank account for 6 weeks. And then when it was reopened, when he showed his ID in branch,
Okay, yeah, this is what I was waiting for. Break out the liquidity from the take the liquidity from the Sydney. At the same time, we can see that nicely we are above the Frankfurt. And 52 will be the next area which we'll be looking for.
So this is far more consequential. Why is it impacting the Muslim community in particular?
Absolutely. So we know that Muslims are less likely to have bank accounts.
We've got quite a lot of orders building up. I'm just wondering if people, it's 51 buys, if people are buying or they closing actually the longs.
Mm.
I spoke to one man who 2 days ago lost his
And we're in the expensive area.
4 miles
Mm. Okay, we've got the breakout.
and we're talking about people who are on a less socioeconomic spectrum in this country, and it just compounds it in multiple ways.
Okay, and how have banks responded? Because they have responded around the Nigel Farage case. I imagine that there are various angles and sort of threads to the debanking story, and they all require different kinds of analysis. But what have the banks been saying?
Indeed, well, it was earnings
15-minute WMA is here at 50.
They don't take personal or political beliefs when they close down accounts. But we know that the FCA has requested an investigation and will be asking banks how many people have been debanked and why. And that will be coming next month.
So important data we can get from that particular investigation then perhaps. Aisha, thank you very much. Members, Aisha Ghani with that, the latest on that developing story. Let's check in on the markets then, the individual stocks that are on the move. Joe Easton has a briefing. Joe.
So Admiral is the best performing stock in the UK today after the motor insurer reported some strong pricing, managing to push up their premiums and not seeing a decline in subscribers according to the insurance business. Marks and Spencer's gaining for a second day, up around 12% in the past 2 sessions now. Deutsche Bank upgrading their price target following that strong earnings guidance from the UK retailer yesterday related to their food business. Meanwhile, over in Denmark, Demont having a good session. This is the maker of hearing aids. They've upgraded their guidance as well. We've also thrown in Allcom. This company does contact lenses and also glasses. So as the producer points out, we've covered eyes and ears today, so we thought we'd get that one in there as well. And we're going to flip over and look at the losers, the red screen. So Stellantis, the Italians were on holiday yesterday, and there is a threat of a strike in the US hitting firms like Stellantis, Peugeot,
28 will hold us. If you start to go down, not really.
Reacting as that market reopens this morning. Then I've brought up our old friend UBS. Now there's an interesting note out from Citi today, quashing any hopes that they could spin off the Credit Suisse unit. They say they've had inquiries from investors over whether that could happen, but they say it wouldn't be politically viable, and they are pushing hopes on that one. That one down around 0.3% in Zurich. Then NKT, this is an electro components company, cutting their guidance, the worst performer over in Denmark today.
Like they are quite small. Today we got FMOC minutes, so everybody will be waiting for that news.
Predicted. However, the CEO spoke to Bloomberg today, and he said he's much more focused on revenue than volume. Have a listen to what he had to say.
Around 9:30, 10 o'clock, some Europe news, but they are not very important one.
So where would you look long now that this breakout happened? Because it has to come down a little bit, I'm assuming.
Don't need to. I would like to see around the 28 is holding, like 30 to 28 is holding, but I don't wanna. I was taking only scalp trades. I am out from my long now.
Oh, okay.
So I taking only like 7 to 10 point scalps and that's it. I don't wanna take any big trades because we're ranging and we can go anyway.
Oh, okay.
Yeah, volume growth of just 1% versus the estimates of I think a little over.
So how do you know you're ranging? Is it because is it because of that? What you were showing me right now?
Yeah, it's like we create kind of the zone. Okay, we're making the new high. We've got a 15-minute WMA here, which we'll be testing now. That will be quite nice
Okay.
area to be tested, and I want to see what's happened when we touch it. On yesterday and 2 days ago, okay, we got a strong printed. We had, what's the name of it? Rejection from it, but today I'm not expecting anything. I just want to see what market will be doing. VIX is dropping, dollar is dropping, so NQ will be trying to make the new high. As you can see, we're testing 15-minute WMA and nothing happening yet. A bit of the rejection, not a huge one. But everything was green for a move, whole move. And now bonds background change red, so means that people start buying the bonds. Mm, 1 minute is about the 5, so they try to change it to be bullish, but the WMAs they are not in order. Okay, with the gold, I think so we'll go break even, because we can go anywhere.
So 120, no.
Things look like the gold got a reversal now.
Business historically has been driven by men. Today, 56% of our customers are actually women.
Oil is still going up, which is good.
So that's a massive opportunity for us. And I think as we get to her, understand her better, develop the right products for her,
present the product in a way that resonates with her, which may not be the same way as for him. That's a big opportunity for us.
Ralph Lauren's CEO, Patrice Louvet, speaking to Bloomberg's Francine.
The light pretty much it's green all the time. There was gray for a short period of the time, but it's green. It didn't change red. We got to prove it earlier. We didn't do anything. We got a nice breakout without the fake out.
Okay.
And the bond background changed green again. So we could be just trending up.
This will smack of desperation from China's policymakers. They are asking funds to avoid net equity sales. We had the reporting yesterday, reports that they were considering a cut to stamp duty on stock sales as well. In the session today, the benchmark CSI 300 fell 0.7%, with all the concerns about deflation.
Nice to see that they building the orders just here. Where is a 15-minute WMA? They're not breaking hard through it, so to get the rejection.
The EOC tried to do their bit yesterday in terms of lower interest rates, which many have expressed the view didn't do much to shore up expectations for that economy. Let us get to some of the other top stories that are being well read on the Bloomberg terminal this morning. Then, Tom, the philanthropic organisation that controls most of the $25 billion in assets in George Soros' family office is set to end most of its operations in the European Union as part of a retrenchment under new leadership. The Open Society Foundation told Bloomberg it's introducing a new operating model. The changes also come as the foundation cuts headcount by some 40%. The Vietnamese EV maker VinFast
We'll go for 170.
after going public in
The POC yesterday, POC is at 173.
bigger market cap than GM, Ford, and BMW, or all BMW, sorry. However, just
So I
1.3
close
million
my
shares
long
are available for
definitely
trading,
too
the
early.
most locked up by the company's founder and his family.
You're long in where?
No, I closed it much too early.
Oh, on the end here?
Yeah, it was scalp only because I assuming that we won't make a huge move, so it was very slow and boring open. And now they start to make some moves.
BlackRock is among companies bracing for tighter oversight in the United States following a congressional inquiry into investments in Chinese companies deemed to be national security threats. The Biden administration signed an executive order last week limiting U.S. investments in China in key technology industries. Vanguard, Fidelity, and DWS also manage funds with investments in China, some of which are the type that Congress is investigating. They're one example, Tom, of the tensions geopolitically between the US and China in that executive order from the Biden administration. But I know we're dealing with another this morning.
Yeah, well, talking about geopolitical tensions, there is potentially, we don't know for sure, an overlay here in terms of the scrapping of this deal by Intel to buy Tower Semiconductor, which is an Israeli company. That dropping close to 9% after Intel terminates that deal because they did not get approval from Chinese regulators in time for that deal. The deadline was the 15th US time. So they terminated that deal, Intel and Tower Semiconductor, which has part of its business is around foundries, is dropping around 9% on the back of that news. It would have been a $5.4 billion deal, and it was seen as important for Intel as it tries to switch focus to some of those more high-tech stocks and build out their own foundry business. So that is the move there from Tower Semiconductor. We'll keep across that story for you, of course, throughout the day. Back to the consumer in the US now. Home Depot earnings beating estimates, suggesting US house improvement spending is actually performing slightly better than expected. Bloomberg's Simone Foxman, she has the details.
Strong retail sales numbers up 0.7% in July, as well as better than expected earnings for Home Depot kick off a busy week of retail big box earnings. They weren't as weak as most analysts anticipated, with comp store sales falling only 2% and revenue up at $42.9 billion. CEO Ted Decker pointing to some weakness in really big expenditures, those big ticket $1,000 plus items like appliances, like patio furniture. But it's important to note that the Home Depot consumer is a little bit different than other consumers in the U.S. economy. Their top consumer is homeowners. They're also very exposed to the pro market, so contractors in there buying supplies for new homes. And in some ways, a little bit more reflective of the housing market than overall shopping, but we'll get a better gauge of that when we get Target earnings. And then later in the week, we are looking forward to earnings from Walmart, which is trading near record highs as it's been able to capture a wide swath of the consumer base. In New
Okay,
York,
I
I'm
can
Sloan
try
Foxman,
maybe
Bloomberg
small
News.
scalp short.
Let's talk about what's happening in
But
global markets this morning. Simon White joins us from our Markets Live team. And Simon, let's go first to what's going on in gilt markets, shall we? Because we started the programme an hour and 48 minutes ago
Come
with
on,
the latest
system, can
on
we
the
be
CPI numbers
faster?
coming out of the UK. And it's interesting to see the
Let's
conditions in
scout
brief trade
for
took
short.
a while to settle down this morning, got slightly higher yields.
I want to
But I
take a
guess the
small
market
scalp,
responded and
but
jumped on the wage data of yesterday, so there was less to play with today. How
look
did you
like my
interpret
system
the
is
CPI print
too
this morning?
slow. Just
Yeah, I mean, well, obviously we expected a drop, which we got because of the energy price cap. I mean, I always emphasize the fact that inflation is a very lagging indicator, so it's telling us that something has already happened. But the Bank of England obviously still pays attention to it, and that's why it's still important from, market's perspective. So it came in slightly
just
higher
waiting
than
for a bit of
expected,
the weakness.
and obviously leaves the Bank of England in a bit of a bind because the growth data isn't as bad as perhaps people expected, but there's still pockets of concern in the UK. I mean, solvencies are near a 15-year high. Leading indicators for the housing market are very poor. So despite the sort of
Okay, in
optically
short,
better
on
than expected
150,
growth numbers, which still aren't great, but just better than expected, it still doesn't leave the UK in a
45 is
particularly
my
great
TP.
place.
So
And on top of that, you have
not very.
inflation, and so that's going to keep the Bank of England tightening for
It's like
longer.
a
So the
first
risk is that they ultimately will
1
cut
on 7 points.
Okay, so that's the risk. Do you think, Simon, do you think they go 50 basis points at the next meeting with a surprise, big number, big rate increase to kind of lock this in and tidy away the inflation picture?
I think on balance they probably won't. The market's priced in maybe a 20-30% chance of it happening. I think they did a surprise or a 50 not that long ago. I think the balance of risk is changing. And remember, by the way, the Fed is clearly very close to the end of its hiking cycle for now, anyway. And that really makes other central bank jobs a little easier. So I think on balance they probably won't, but as the Bank of England, so I honestly, I don't actually know.
So all things, various outcomes could occur. But let me ask you about what's going on in treasuries and broader sentiments, I suppose, on markets, the link between treasuries and stocks. The story of April does seem to have been dominated by weakness in stocks, weakness in risk assets, on the back of concerns about higher yields. Today we see something different. I mean, risk appetite really turned around in the last hour or so. US futures ticking higher, NASDAQ futures up 0.3%.
Okay, price of accepting us in a check box, 15-minute WMA, now it's us the support, and we see we ranging because the bonds changed red again.
The genie's out of the bottle, really. I mean, markets are concerned about supply risks. Ultimately, inflation risks in a much longer term perspective. If you have persistently big fiscal deficits, which now look to be a feature rather than a bug, not just in the US, by the way, but in across the Western world, the pandemic really
ATR
accelerated
drop,
that.
so
In
the
a world
Tuesday
of
should
large
go
fiscal
higher.
deficits, then inflation is a longer term risk, and it tilts the whole balance. Clearly the long term dual market bonds, which began in the
VIX
early
is
80s,
below the
is
200
not clearly over. The
and below the
situation is
line
very
it is
different now.
red.
The inflation genie is out the bottle, and governments are going to have to borrow an
I
arm
just
or
want a very
borrow
small
much more than they
TP.
have done in the past.
Okay, Simon, thanks very much. Simon White from our Markets Live team. Remember, you can get up-to-date analysis and insight from Simon and the rest of the Markets Live team. Mark, of course, running that team. NLIB Go is the function on your Bloomberg terminal. Now, in just a few minutes' time, we'll be talking to Gareth Davies, Exchequer Secretary to the UK Treasury, about the latest stickier than expected inflation numbers. They are coming down, but still waiting to do wage growth and the outlook for the UK economy also in focus. Stay with us. This is Bloomberg.
We are below 36, but 36 is green. internet about the feed channel. Definitely, I can see that it's much easier today to trade the oil and
Mhm.
first TP done. That was nice. 142nd TP, which is a 9 points. When I scalping, I've got slightly different take profits. I'm not taking like to cover the contract.
Mhm.
The TPs are very small. I will leave one try to run, but that's it. Okay, I would like to see the line changing red. It's only gray. As you can see on the scalper, we are
Mhm.
oversold, and
Right.
as well the search finish. So I wonder what this will give it to us. Scalper can continue print here, and actually it's showing that the bears they got bit of the power because they are below the 50%. Only one thing is telling me we are bullish, and I will be looking to come back to be bullish because the way which London Open never go even to the 50% of Frankfurt.
Who leads our North Asia tech team. Debbie, why did this deal fail to go through? Is it all about geopolitics?
So we have a prove it that just came on.
Yeah, and evident lines changed to red on RTY, YM. Yes. Only NQ, it's not red yet. And I've got 36 change red. So, but the next level will be 33. Okay, I can try to do that. Then 33, it's actually 50% of the swing. So I'll move my TP there. And nice rejection from Algo line.
Debbie, thanks so much. Debbie Wu in Hong Kong with the latest on that chip deal that was and doesn't look as if it will be. And that is it for Markets Today. You can catch insights from us, of course, and the Markets Today team by going to the front page of the Bloomberg UK website or typing TLIV Go into the Bloomberg terminal. Just quick check on the markets. We're actually a little more positive on than we thought we'd be. The FTSE 100 underperforms. Other European equity markets edge higher. US futures higher. Nasdaq futures up by 0.3%. Yesterday was derailed from a stocks perspective by the retail sales print. Today we've got yields falling. Does that add some room for stock markets to go higher? It seems to be the short-term dynamic at least. The pulse is coming up next. This is Bloomberg.
Nine AM shortly. Yeah, yesterday was much nicer. Really, everything was moving, and today it's so slow.
Oh, really?
Okay, look like that the gold wanna go higher, so definitely I will closing some profits and oil. Our security as well. Don't want to lose the money on that. I can reopen the trade.
So we had a breakout and then it says fake out. Why? Because it went higher or because it's coming back down? Did that get printed later?
Because we got to prove it and we start to print the red line now.
See, mine is not red. Do you have
No,
yours on something else? No,
my
mine's not
one
red
is
yet.
red.
Is it because maybe I have it? What do I have it on? I have used higher time frame 15, increased
Yes.
sensitivity.
Yeah, I'm not using those. I remove the
What do you
filters
use?
because it's much faster.
So increased sensitivity, or do you have used higher time frame or no?
Uh, as you can see here. I'm not increasing anything. I just use the standard setup.
Okay.
Okay.
So everything you have it just as that you just took off used higher time frame off.
Yeah, it's off. For me, it's
Okay.
off because I want to have a faster entry. So if you want to use the higher time frame, it will show you better signals, much more, how to say that?
Hmm.
It will show you much better signals.
Hmm.
Okay, the VIX is dropping. We can see the proof is not doing anything yet. We are around the 15-minute, around the value area high, above. So POC is just 120. I don't think so. We'll go back there, but one of my TP is at 134. And the second one is runner, which I will be trading after we'll hit 134.
So on the trailing stop, it has like the entry for a long would be at 15113.
The Chinese authorities have asked some investment funds to
That's
update
where I would
the next
either
set
go
of
long there
rates
or at the
to
VWAP
provide
at
deeper
Mhm.
financial
15111.
markets. More weak data from
But that's either
China
the right thing.
pulls
That's
Asian
what I've
stocks
been
lower
doing,
for the fourth session
and it's
today.
been working.
UK
That's
inflation
good.
remains
So
Uh,
you don't need to
expected
take
down
many
slightly
trades.
to
Just take the one which you know that these levels was working for you.
but
But
yes,
as I mentioned yesterday, some days market will change the way the algo working. So
mhm,
you will need to notice it. Okay, today it won't work.
mhm.
A very good morning to you. Good afternoon if you're tuning in from Asia. This is the spectrum. Europe is suffering immunity from the China angst and woes. Look at that. The European map is still just eking out some gains. I can tell you this. Volumes are 33% below where they are normally at this time of year. As we see growth outlook for China being slashed by JP Morgan to 4.2% next year. Immunity at the moment. I had Jane Fraser
Adam
with me this
mentioned
morning for
yesterday, I don't know
market
if you
focus
heard
off the
him,
back of the
about
instant
when that
response of recent
firecracker
word
comes
China,
on.
not US to
That's a
China.
good
And our headline is, of course, there's
um,
more angst in shadow banking. The Fed
signal
has
to
not
say
asked
that price
China
won't stay
to
above or
sign
below that
bonds to
It should,
firecracker.
yeah, it shouldn't pass the level. That's right. Like here, you see, we had a firecracker, we had a move down,
Right.
and then we struggle here a bit, and we gone over.
is in Australia. We've got walkouts and
But we had
we
another
have the
firecracker somewhere
smartphone
around.
there. So we
What
saw the market
price was that?
explode higher by some 15%
That
before
one
coming back down
was
and drop. Week to Zloty
130.
up. We put that in there for you.
Okay.
0.1%. There's been attacks on the Danube overnight, again in the Odessa region. So there are concerns about supply there. 10-year yields are falling. We'll get to Valley Total in just a moment. Now is the time According to Stephen Major at HSBC, who says, go up that curve, get yourself long those bonds. 30-year paper, by the way, for example, above the level that we saw in 2011. You're looking at this year's highs on 10-year paper, but we are trickling back down. And cable trades at 127.41, up to 10.1%.
See, we are quite bullish. The rejections are a very big one, and the line changing from red to green straight away.
And that is something to be concerned about. Let's focus in on 10-year paper, 30-year bonds. They rose to the highest level since October yesterday, with those stronger than anticipated.
We cannot pass the evidence line, bullish evidence line.
May have to raise rates further. Retail out is with it. So far, we saw this spike and now roll on some of these yields. The narrative is the Fed
And Victor's still going down.
according to Kashkari. But there is also the narrative building by some of the major houses, Stephen Major being one of them.
It's going down, the dollar not doing anything.
Valley of duration. Good morning.
Good morning, Manus. Yes, a lot going on in the Treasury market. My eye is surely squarely on where these real yields are going.
This
It really was
divider
that
line.
retail sales beat that drove a lot of the move yesterday, because retail sales, Manus, feeds directly into GDP. That controlled group feeds directly into GDP. Consumers make up 2/3 of GDP spending in the U.S., which is just boding ever well for this third quarter GDP print. We saw JP Morgan seeing upside risks already to their third quarter call, and that Atlanta Fed now, their GDP forecast for the third quarter is now on a 5 handle. So this U.S. economy isn't turning, I guess, negatively anytime soon. That's what the data told us
But
yesterday.
bullish.
And back to Stephen Major's point, maybe now is the time to go
I'm sorry?
long in the bond
It's
market.
choppy but bullish.
I guess opposing argument to him is, if the U.S.
As you can see on the scalper, how the bears was losing the power, and then we are still on the bullish side.
And a surge in Treasury supply. If you do think that this latest real yield move has been more
Dollar
driven
dropping
by
6.
supply and demand dynamics more than anything else, perhaps actually we could enter a recession and see yields not fall as much. Yes, they would rally in the front end if we price in Fed hikes, but if more government spending is on the cards, if a bigger and swelling deficit from the U.S. government is in the cards, that could keep the longer rates, longer yields in the Treasury yield curve quite supported.
Okay, two sides to the market. I made this note this morning. Talks about making the case for short rally. Thank you very much, Valerie Taital. We've had more data from the United Kingdom. The annual inflation rate fell last month, less than expected, as the cost of travel and holidays climbed. The latest figures add to the case that the Bank of England may have to raise rates again. But some Treasury advisors are
We'll
concerned
be
that the Bank of
bringing
England
PLC
is
higher.
at risk of overdoing
A
it,
lot of
pushing
orders
the UK
building here.
into an unnecessary recession. Let's speak to the government minister now. Gareth Davies joins me now, the Exchequer Secretary to the UK Treasury. Gareth, thank you so much for joining us. I mean, if we look at the last 24 hours, wages growth flows out by a record amount. You're looking at services inflation, the highest since 1992. Are we losing control of the inflation narrative? Are we in some kind of a doom, sticky loop on inflation? Good morning.
Well, good morning. Thank you very much for having me. Today's figures, as you were reporting, for inflation has come down significantly. Relief by a lot of families and businesses across the country. We've seen a significant reduction. I think it's the lowest level of headline inflation since February last year.
You're waiting patiently for your level to go long?
Yeah, no.
No?
I went ahead and got in that short right now, but
Okay.
if it takes me out, it takes me out. I'm already at break even just in case at 47.50.
Okay, that's good. Actually, we start to print the trailing stop on for the shorts.
Print what change? I'm sorry.
We start to print trailing stop for the shorts. As you can see it here.
There's no doubt about it.
but so far we
I
was
don't have
print.
it. I don't have that yet.
I've got because I've got the two setups. One is on a smaller one, which is from 1 minute. Second one is from 5 minutes. So this is the 1 minute one.
Oh, okay. I have the old one, the old trail stop
Yeah,
at
because the
128.
yeah.
Is there a political palatability to do that to tame inflation? We've got a
Okay,
plan
can we
that
go back test 1 minute at
is
least?
ensuring that inflation is our number one target in terms of priority for the
So
plan.
it's testing the 140 set, which is the 15-minute WMA.
Most of the
Yeah.
forecasters believe that
It looks like it didn't want to hold the 15.
OBR and Bank of England all expect inflation to come down significantly this year. You talk about other countries, it is a global phenomenon driven by post-pandemic
Only bonds are buying the rest of the things. It's in correlation for NQ to go higher.
We need to stick with that plan. One of the things that we can do is ensure that our fiscal policy is aligned with the Bank of England's monetary policy. That means taking tough decisions when it comes to public sector pay, for example. We've taken action to hold down energy prices with frozen fuel duty. So we are taking what the IMF have called decisive action. We just need to keep going with that, and we'll see inflation come down overall.
Andrew Bailey, you talk about alignment between monetary policy and fiscal policy. Andrew Bailey has made it clear that higher inflation or inflation spiral, as it would appear that we are in, is going to mean higher rates from the Monetary Policy Committee. Are you concerned that higher rates could invoke a pretty hard landing, a recession?
Nobody wants a
gone
recession.
green.
We've been very clear that critical to ensuring that we can grow our economy and avoid a recession is to get inflation down. And the Bank of England have been clear that in a year's time, if we stick with the plan, inflation will be around 3% while avoiding a recession. We've seen a major upgrade to our growth forecasts by the IMF, OBR, and the Bank of England. I remember not so long ago, a lot of the forecasters were saying that we would enter a recession by now. That hasn't happened. But we do need to ensure that the driving factor here is getting inflation down. We do need to align fiscal policy, as I've outlined, with the Monetary Policy Committee's decision on the
What does that actually mean? What does that actually mean in terms of aligning your fiscal policy? It's a very broad, grandiose term, if you will, align, but it means something a lot more severe, doesn't it, Gareth?
It means the action that we've already taken, for example, the energy price guarantee, which held inflation in energy prices. The OBR said that would knock about 2% off inflation by holding the duty on fuel, for example. We've seen fuel inflation start to come down. It's taking that part, the decisive action on those factors, while also not making decisions, not taking action that would exacerbate inflation, for example, by increasing borrowing and spending at unsustainable levels, by making decisions on taxation with fuel inflation. So it's part action that the IMF have said is decisive action, while also making sure we don't exacerbate inflation. That's what I mean by aligning the tough decisions that we've got to make in the Treasury with the tough decisions that the Bank of England are making on monetary policy.
I look at debt to GDP. Your debt servicing costs are exploding, as are other nations around the world. Before you caveat that for me, the debt to GDP is over 100%, Gareth. We haven't seen that since 1961. There hasn't been much achievement in terms of reducing that. I suppose the question that we here have got to ask you is, are we in a more perilous position for the government bond market of the United Kingdom than we ever were under Liz Truss? I mean, this is a fairly brutal statistic for you to deal with. Are you concerned about a strike in owning UK government debt?
Oil going for a new high.
And it's worsening.
Well, you're right to point out the level of debt that we have in this country, but it's also important to highlight what has caused that high level of debt. We had a global pandemic shock to our economy, which required the Treasury to step in with hundreds of billions of pounds of support to ensure that businesses and individuals and families could get through the worst of that crisis. And then we came out of COVID to have an energy shock caused by the First War in Europe for a decade. So we've stepped in with about £94 billion for energy support for businesses and individuals as well. So it's no surprise that debt is high. What we've got to do now is get inflation down, make sure we can grow our economy, invest in our people, garner business investment to get that economy growing, so that we can get the debt down. We are not complacent.
Okay, my God,
You're
trade
right
will
that other
stop.
countries are facing the same dynamics, and they are because these are global factors that cause this situation.
How can you trade so many at one time? I get so.
I was checking the level if something happening at the level which I was interested in opening a trade,
Uh-huh.
and uh, straight away after I'm in profit I'm going to the break even, and that's it.
It's gone back on track following one of the worst years in history right here on.
Uh-oh.
The line changed to green. Nice build of orders. Everything at the same time. Why am I leading today?
Norway's Sovereign Wealth Fund has seen a 10% return of $143 billion in the first half of the year, driven by tech. The gains there indicate that the fund is back on track after one of the worst years. Its largest holdings are Apple, Microsoft, along with a number of huge tech names. Now, it chimes with Bank of America, the survey there, which found that global fund managers are now the most overweight technology since December 2021. Hannah Peters, global equity investment analyst at Sanlam Investments, challenges that base case. Ms. Peters, good morning. So the rest of the world is long, and long can be on tech. But you have a warning on mega stock trends. You're a little bit suspicious. Can you qualify that for me?
Morning, Manus. Well, I think that when we see such a dramatic move in many of these names, of course, the largest names in the world, they're all trading on very expensive valuations. And I think now is the time to be cautious. I think many investors have long forgotten the pullbacks that we saw last year. Of course, names like Microsoft, like Amazon, for example, had dramatic pullbacks last year because they were all trading on exceptionally high valuations. And I think that if you are now trading on
Okay, the VIX look like wanna wake up.
I think now is the time
That what's gonna wake up?
and perhaps
The
reduce those
VIX.
positions, which is what we've been doing.
Oh, okay.
Let's see if we can go past 625, 626.
The bulls in the equity market,
and he said, look, the premium, the equity premium is not there. Do you think that there are cracks and fissures, as it were, appearing in the yield in equities relative to bonds? Does that have any merit for you in your world? I'm just going to grab the chart with the dividend yield to bond yield. Are you with Bill and Hillary the both?
No, I completely understand the
I'm
argument, but I
profit
think also
again,
those
but
investors
I
that have
think I want to
invested
close it because
long-term in bonds, unfortunately, especially due to last year, haven't done particularly well in terms of returns. And I think in an environment where you've also got inflation, those real returns can be a challenge. And on a headline level, yes, the equity market does look expensive, particularly in the US. And like we said before, that's largely driven by those
where
large
are
cap
those
names that are trading
birds?
on those high valuations. But this is the time to look under the hood, underneath that headline level, and you'll see that because we have such a bifurcation in returns this year, that there are actually some really, really exciting growth opportunities coming out at more reasonable valuations, and those names that have lagged those large sort of headline numbers that have really driven the
You can
market.
see
So
how
yes,
nicely
on an
divided
overall
line
level,
it's holding the
equities
price
versus
all the
bonds not
time.
looking quite so great,
Yeah,
but underneath the hood, underneath that headline layer, I think
at
there's some really exciting
45.
opportunities out there.
We're getting more and more. There is the equity risk in premium, by the way, relative to bonds, and as you can see, that is coming back to the average level and indeed below that. Let's shift the narrative to China. I mean, we've written a great deal. Fitch may reconsider the credit rating. There's concern now. There's narratives and instructions to the asset management community, don't sell as many equities. There's concerns about shadow banking. There's concerns about retail sales, concerns about fixed asset investment, concerns I could go on. And yet you are quite bullish. Long-term growth, 30%, new room for pipeline, 6.7 compound growth in cash flows, etc. You are more bullish on China than the headlines are at the moment. So what is it? When all the rest of us are fearful, you agree?
So I think the example you're using there, of course, is Intercontinental Hotels Group, which is a UK listed business, but it's got we think it's going to have about 30% of its new room exposure in China. What we've noticed in the market is that the Chinese market is about flat this year if we're looking at in dollar terms. We've seen some massive pullbacks, of course, last year exceptionally weak. There is, again, a huge difference in returns between those companies that rely on China as a growth engine, and Intercontinental Hotels Group is one of them, for example. The other examples, of course, would be something like L'Oreal or Louis Vuitton. They have China as a growth engine. They've done exceptionally well this year. So those companies that are actually listed in China, there's been a lot of weakness around that due to the sentiment. The companies that are reliant on that growth engine are actually doing really, really well this year. There is a huge
So on
difference,
that
though,
dashboard that
in
y'all have, does
very
it say that
careful
it's
risk selection.
ranging
I
even
think
on
when you're
that?
looking at China, a company like NetEase is up close
Yeah,
to
it's saying
30%.
ranging,
So
higher time frame
exceptionally high
ranging,
performance. The fact that we're looking at that
order
very, very
none.
online, that mobile gaming, but then you've got to stay away, I believe, real estate and some banking exposure in particular in China.
And that, I'm sorry, I misrepresented that, of course. I should have qualified and said that there are names, and you quite rightly corrected me, IHG being one of them, which has a huge China exposure. But when you see those mega
Okay,
macro
VIX
headlines
background
on
changing to
China,
red.
do you think people,
But we'll see
how
if
do
the
you think
VIX
the
can go
reaction
higher
by
or not.
Europe, for example, Europe's quite steady this morning, not really gushing headline after headline after headline, which is very charging on China. Why the immunity or impunity, if one can use that phrase at the moment, on equities to what's going on in China? Do you think positioning is light in China?
I do think positioning is light in China. I too was also surprised by the sort of strength in some of these names, particularly with their Chinese exposure in Europe this morning. I think that there is a lot of weight put onto where companies are listed, and that's something that we really try to ignore, to be honest with you. We're looking for where companies generate their revenues, and I think that's what's really important. And like I say, companies like L'Oreal, like Louis Vuitton, have these massive Chinese exposures of 40-odd% of their revenues, and it's a real growth engine for them going forwards, but they are trading on exceptionally high valuations. They seem to be immune more so to this Chinese, to the bad news in China. They're looking through that. And I think that bad macro vocabulary, if you like, can actually be a good entry point into names. I think we have to try and look past short-term news and invest in companies that have that long-term structural growth opportunity.
Anna, thank you very much. Anna Kuchpiusa, Global Equity Investment Analyst over at Sanlam Investments. At Norge Bank Investment Management, I should say, the CEO, Nikolai Tange, will be joining the TV team, the Bloomberg TV team, third. That's 1:15 UK time, right here on Bloomberg.
Okay, I am change green. Yeah, we're trending, we're just using the upper band from view up. But there is no news like which should make any big change. I think so, yeah, 20 minutes. I will be closing for Europe. The reason why it's not tradable market. We don't see a trend, we don't see anything. VIX is going lower again. I was looking for the pattern where we can see we got a small move down and bigger move up. Small move down, bigger move up. Okay, I'm going long on gold.
I lost. I was saying,
The last half year, indeed, to raise the prices in line with the cost inflation we
that
encountered
price would come back under and then go all the way to the and touch the
our
and
test
then I
price for the
go
flagship
long at
stocks
the
in Europe. And hence you see a net revenue per hectoliter, which is roughly 10%
but it's like
higher
it's going
than
higher.
before. And we have been able to ensure that we would remain to have the gross profit that we needed in order to further develop our business and also to invest further in our brands.
The contrarian candles click in now.
The contrarian candle to take a short.
No, it means they can go and break areas now because they click in. White. So as you
Contrarian, wouldn't that be the opposite of what we're of the long?
no, but it mean what's the way they're working. It's mean do not open the trade. Do not open any trade as they are printed because price can go and break the levels, which will go higher and higher. Or the other thing which can happen with the price is just stop and it's a reversal of the trend. The best is just wait here.
Chinese authorities have asked some investment funds to avoid being net sellers of equities as the right deepens in the country's financial markets. More weak data from China pulls Asian stocks lower for a fourth session. European stocks fluctuate. UK inflation remained higher than expected last month, with the climbing cost of travel and holidays. Investors now bet the BOE rates are steady. And Neil Kashkari says the Fed is a long way from cutting rates as US retail sales show consumers are alive and kicking. A very good morning. Welcome to Pulse. I'm Men's Training in Dubai. You have blowout inflation numbers in the United Kingdom, and that really is something for us all to consider. The Chinese shadow
I'm
bank,
out.
Zhonggong, has missed
You're out.
dozens of products indicating troubles at the embattled lender.
I'm not touching. No.
Liquidity challenges underscore the problems in the public sector, where new home prices in China have
This
dropped
another
for the
breakout?
second month in July. Joining me now is our China government economy editor, Jill Jill. I mean, there's lots of headlines coming across here now. Talk me through the scale of the unfolding crisis around
And then we're at the expensive area.
at the moment.
Yes, Nana. So ultimately, what you really have to remember here is that this trust industry within China, this is a $3 trillion industry in China. And a lot of the concerns that are unfolding, both at this bank affiliated with this larger one, is that there's this, it's sort of creating this idea that there could be potentially some contagion risk
Oh,
from
it took
a
my
lot of what we're
TPs from
experiencing in the property
nice,
sector
from
right
the
now, sort of
oil
spilling
crate.
over into the financial sector. So as we understand it, some
Just
of the
$900
payments
bucks.
are affiliated, or some of the investment products affiliated with these companies, these trust companies, are related to real estate. And then, as we know, real estate problems in China have been at this point a years-long concern, and really kind of worsening within recent weeks and months. I mean, we've been spending a lot of time on this program and other programs talking about a lot of the problems at Country Garden, one of the nation's largest developers, which is experiencing its own liquidity crunch. And then we also know that there's these continued issues playing out across the housing sector at large. We just got some pretty weak home price data out of China this morning, some very weak property investment data yesterday. So all of this kind of combines to tell us that we still have these really, really deep-seated concerns about not just the property sector, but also how it's kind of spilling over into potentially other industries, as you see here.
Well, look, I mentioned it through the show that JP Morgan downgrading growth this year an extra 4.2%. Barclays also slashing their growth targets for China. How much of that is new information? What is it in these downgrades that perhaps I need to focus on more closely?
So, look, Dennis, I think the important thing to remember here is that with these downgrades, JP
Oh,
Morgan
everybody.
4.8%, Barclays
157,
4.5%. Starting to see
155.
analysts consider that
I'll be back in a minute, okay?
ultimately considered a very
I am gonna take a short. I took a short right now. I know maybe I shouldn't. Maybe just to the area the VWAP area, which is 157, and then the 20 is at 157. I mean, when around there.
Oh,
157, 155.
yeah.
So that's just 5 points.
Okay.
Try to recoup some of.
Okay. I'll talk to you soon, okay? I need to just go somewhere. I'll be back in a minute.
Look like how all of that would unfold. But I think now we're starting to see some fears over whether, we can really hit those targets, how we have to reorient our calculus around China, and then ultimately how we have to kind of keep in check our expectations for support and further stimulus this year.
Okay, so thank you very much for this on the China growth downgrades. Let's turn our attention to the crypto markets. According to the latest Bloomberg data, Bitcoin's next day fall has dropped the lowest since 2016. It's an unusual stretch of count with a digital token. It's hovered around $29,000 throughout most of August. Let's get to Adam Back. He's the chief executive, the co-founder of Blockstream, a leading provider of blockchain technology. And famed in your world, famed in the Bitcoin world. What will rock me out of this slumber? Volatility, the lowest since 2016. There's a deafening silence. What's going to rock Bitcoin above or below the 29,000 level? Adam, good morning.
Good morning. Yeah, I mean, I guess August is a quiet month in Europe. It's going to be holiday, but Yeah, I think Koltun tends to surprise people. They get bored and then suddenly something dramatic happens. I think to see that we are something
Well, event risk is always there, isn't it? There's a halving event to come, probably in the
You
spring
can
next year.
see
What
the
impact will that
entry was
have?
nice.
160
I mean, it does.
short.
If sort of, there's some debate about whether it's priced in the market.
I'm gonna take the first TP.
If they
I
genuinely
want to take it
think
now,
that
but if it's gonna go under and give me 10 points, then I'll take the 10 points at 150.
and it also punctuates the
I mean, I can bring my. I'm at break
because
even now, so I got 10 points on one micro. I got in on 5. I'll just do my. I'm doing what you told me. So my
Yeah.
setup is basically take 10, 10, 20, 50, 100, and a runner.
well, I think it's
Everything goes
possible that we get
break
to
even at
a
20.
new all-time
Okay.
high of 100,000 more
That's
in
the
Bitcoin.
setup that I've been using.
Simply for the reason that the last few years have been
Sometimes they take off the 10 point one and take it at 20 versus 10.
bankruptcies.
Or I put it, if I take off the 10 sometimes, I always leave the 20 though and the 50. And sometimes, no, sometimes they take off the 50, but
Halving
if
events.
I take off the 10
There's no
and
fee.
it takes,
You're very
and I don't
much
take it at
remote.
20, I'll leave it at 10. Like for if it's coming back down, I get it at 10 points anyway, because that was the original method. Or I won't leave it at break even. So if I take off my TP 10 points at 10, I'll put it back after it's past price.
Good man.
So I'll either take it at 20 or take it at 10. Either way.
You come from the mining industry, the mining sector.
So I got my first TP.
$125 million. Do you need
So the rest are at break even. But I have the other stops at 20, 20, 50, and 100.
So it's primarily, well, it's
And if I can get to our VWAP, I can go long. I still see it long as a structure overall. So I would still be going long. This is the first time I try this, when I'm waiting for it to go back to price where I want it.
Now it's a 1 minute WMA here at 44.
Yeah. We have approved it on the VIX for
Yeah.
going up.
Yeah. And the nice thing is 5 minute and view up and supports at the same level. So yeah, 24.
Going back a couple of years, there was a shortage of miners going into the Bitcoin bull market because the price appreciated, mining profitable appreciated, and manufacturers couldn't produce them fast enough. At this stage in the cycle, there's actually a surplus of miners and a shortage of ready-to-use hosting infrastructure. And you have to bear in mind, a lot of the Bitcoin ecosystem is underfunded, undercapitalized.
So I had asked Adam yesterday about like when the print structure prints of like a starting of a level, if we should place it. And he said, no, not really. And that's another reason why I took it, because I had this one, I had to take a short here. I had a level there, but that was from the market structure that printed. I don't even know. I have to go back and look. It had to be within Thursday and on, because I started taking them off yesterday.
No, I don't believe he's been heard from since.
But we're in the expensive area too.
By email.
We touched
Yes,
the
but we're
loss.
quite bullish after all of the drops. They would try
Mhm.
probably to build up some orders. Now, yeah, we're testing 15 minute, and 1 minute is below that.
So radio silence. So he knows where to catch you. You're obviously making bets on Twitter. Well done. Good to have your call this morning on the miners and indeed on the halving event and where prices will grow. That's Blockstream's chief executive and co-founder, Adam Back on Bloomberg. Coming up on the show, Open Society Foundations ending most of their operations in the EU. More details behind the shift in direction by George Soros' charitable organization, The Move on Bloomberg.
That was quick scalp on oil.
Probably a small pullback, and I'm about to get out of my trade. It's gonna take me out. VIX is dropping
Okay.
again. The prove it on VIX didn't go.
Yeah, and now we've got the bullish. Now we've got the bullish. What's the name of it?
The
Trading
RCI.
stop. Trading stop.
Oh, okay.
Big tech
Oh,
matters. We
yeah.
know that breaking news on the pulse. Sunman is trending in Dubai. Tencent has just delivered their
At
numbers
120.
for the second quarter. Now, the revenue has missed. So the top line revenue is missed
I'm in long.
149.21.
I mean, we almost. You're in long. At what number?
Now,
Yeah.
the issue is this, is that on an adjusted basis, the net adjusted income.
They're very bullish. The first time we just gone. Actually, no, we was tested earlier and we had the rejection from expensive box. So I'm waiting
Just digging through here. They cut their total of
now to break the 170 area.
So where did you enter long?
People, just think about WeChat. Think about the
56.
think about the network that they cover. 11% growth in revenue matches the March quarter.
When I saw that we start to print the bullish
Okay.
trading stop.
For you there. Editors and reporters are contributing throughout, dissecting the numbers from Tencent. The stock's up 3.65% year to date. Do you want to be long tech in China? That is the question. Revenue up 11% year on year, but down 1% on the quarter. We'll leave it there. The philanthropic organization that controls most of the $25 billion of the assets in George Soros' family office is set to end most of its operations in the European Union. For more on what that means, Maria Tadeo joins me now. So this is the end of a generation, really, of Soros in Europe. Is this a downsizing? Is this a statement? How do you walk away? How do you take away the walk away?
Absolutely, Manos. And this is a very significant story for many reasons. To some extent, as you say, the Soros Foundation, Open Society, they say they will terminate their operations in the European Union this year, and the operations that they keep and decide to keep will see extremely limited.
So how do you like? We have two though. We have the short and we have the long.
Yeah, this is why we're chopping.
Oh, got it.
And the platforms for ideas like freedom of
Other
speech
these are looking for like scalp trades and only one contract open. 10-point stop loss.
like perhaps Ukraine and Moldova. But Manus, you alluded to this, it is to some extent
Okay.
the end of a chapter.
Makes sense. Okay then.
George Soros has a very
Yeah, I wouldn't want
personal,
to.
deep connection with the region,
I
particularly
wouldn't
in
open
Central
here like
and
more
Eastern
contracts
Europe.
at this
Remember, he is
area
Hungarian
as
by
we can
birth.
start
He
the
was a
retracement
great
now.
critic
It's
of
London
communism.
time
He's
and
been deeply engaged in
8
the
it's
global
small,
debate
so
in that
the
region.
candles
Now,
they can
pulling
go
back
anyway.
from it, obviously, it carries a very sentimental to impact on this region, and we see
I
this
need the
pullback,
entry
which
on
they say
oil.
is strategic. Again, it's thin on
I
the
need to
details,
wait.
but obviously politically significant too.
What are the political implications, Maria? I mean, we just had a massive grapple there, $19 billion spent, but is there a political undertone as well on this withdrawal? Or scaling down? Maybe we should use the word scaling down.
Yes, and then already, by the way, when you talk about the downshift and the scale down, we knew that it was happening to some extent because Mr. Soros passed on control.
So earlier we touched the WMA on the 1 minute and it went back up.
Would happen
So if that's the other part, I could have just gotten at 45 as a long.
would cease to exist. But it is political, as
And I didn't realize that. I didn't realize that we hit the,
Open Society and Mr.
the
Soros
1 minute
himself. So
WMA.
real political battleground in countries like Hungary, but
It was
also
15
some
and
said
1 at the
to
same time.
Poland,
Now
who
one
there
try
has
to
been
pass
now
the
for many
15.
years
But
a
still they're not in
political
order. We
fight
are
until
below
Mr. Soros
36 moving
Hungary Prime Minister
average.
Viktor Orban said that
46,
he's not
24.
that he's not doing philanthropic work, that this is
So they're not
something
in order yet, but they're almost in order.
The far away because 15 need to pass the 5 need to pass the 15, so still far away from that. The bulls, you can see as well the bulls they losing their power. The previous bulls there was nice and consistent. Now only few like 2 candles and then we're printing white one.
Is that, well, obviously democracy and liberal values, if you don't have the funding, it would make it very difficult for some of these NGOs and civil platforms to continue their operations.
Okay, Maria, thank you very much. Valuable insight there into George Soros's move on funding in the today. European natural gas futures, they're lower this morning after spiking in the first flush for the second time in less than a week. That's as tensions run high over the possibility of strikes in Australia that can severely tighten the global market for liquefied natural gas. And the discussion
46
between
minutes.
European Union officials and one of the two companies operating the affected facilities yielded no firm outcome to the labour dispute. Ukraine's energy minister says the country is preparing for another hard winter as the war with Russia grinds on. It's an exclusive conversation with Bloomberg. Gaman Galushenko told us Kyiv is expecting more inflows of gas from its European partners.
Today we could say that already something around 600 million of gas stored in Ukraine, which is gas of European companies. And that is also important for the security of supply in Europe due to the level of storages in Europe now, because it's very high. So I think that is a good solution for the business, and that is a good solution for European security.
Do you expect more coming, Minister, from Europe?
Yeah, we expect more coming. So I can tell you that we prefer average something around from 500 to 600 per month. So and we could offer from our storages. We need 15 BCM for Ukraine. So the next season, and so 15 BCM is open for storage in Ukraine.
Can we talk about what you expect to happen this winter, Minister, both in terms of the situation in Ukraine and what you think the energy situation is likely to look like in Europe?
I think that's very important. I mean, when we are talking about the gas, that's very important instruments which already started in the European Union, that is the joint purchasing platform, which would allow us not to speculate the prices and manipulate the prices. And I think that is a very important decision. Concerning the Ukrainian energy system, of course, we are preparing for the another hard winter. So, and I just recall you that the previous winter we were living under everyday massive attacks on the energy infrastructure from Russia. So it started from the 10th of October, and the last massive attacks one was on the 9th of March. So and it was every day by all kinds of weapons. So now we are preparing for the next winter, and we are not expecting they wouldn't.
Okay, there will be news, but as well at Europe flash employment.
On the gas flows coming up in the show, some British Muslims have told Bloomberg that their bank accounts have been unexpectedly closed. We bring you more of the debanking controversy right here on
the 146.85 is the WMA. 146.84.
Below 200.
Now
we are below 200, which is nice build up for the short. Below 36 moving average.
So here's my where I don't know whether to stay in the short or flip long at the WMA.
I wouldn't flip
Which
long or nothing like that.
no. So the structure is still in long though, right?
Yeah, yeah, but we can start the retracement. And
Mm. I said I didn't have the WMAs on until now. Like I just put them on right now. So I didn't. So we already hit the WMA one time already. The 1 minute anyway.
yeah, and 1 and 5 they're at the same level. Sorry, 1 and 15.
That's at 147.
Timelessness and sustainability go together, right? You can't expect to be timeless if we run out of resources. So for me, sustainability is not a side activity. It's not a reaction to external pressure. It's core to who we are, what we stand for. And to a very strong extent, it's about future-proofing our business, right? You need to focus on sustainability to recruit. More and more,
It closed my long. Why?
they want to work for companies that care about the planet, that do more than just kind of generate revenue and profit. You need sustainability to attract
I mean, I had a limit anyway, but it didn't take on a demo trade.
Are you making a difference? Investors, particularly in Europe, more
Take me in at 147, but it didn't touch.
partners have expectations on sustainability.
Ralph Lauren, CEO, Patrice Louvet speaking to Bloomberg's Constantine
Actually, this not
The full
area
of those
to
market
be in
rates
the
in
trade.
9:30 p.m. New York time is on Thursday at 6:30 p.m. London. Well, ever since British politician turned content manager Farage said that the bank account of his was shut down because of his political beliefs, the issue of debanking has been thrust into the public spotlight. However, it's an issue that British Muslims have to contend with for a while. Joining me now is our fintech reporter, Aisha Ghani, who has been researching the story. Aisha, what actually happens and when do you get debanked and just how widespread is it?
Morning. So when I've spoken to people who have been impacted by having their bank accounts shut, what has typically happened is that their account will be frozen for a few days or for a few weeks. And in that time, they have been unable to access their money in their accounts. It means that their direct debits have bounced. They are unable to pay their bills. I spoke to one man, Akil Ahmed, who was a former postman in Luton, and he was frozen out of his account for 6 weeks. And in that time, he wasn't able to pay for his groceries. And then eventually, the bank did shut his account down, as well as his wife's joint account and the savings account of his children. Now, it's pretty widespread. We know 1,000 bank accounts are shut down each day, and it has been going up and up in the last few years.
Well, I mean, obviously the Muslim community has been hit particularly hard by this debanking. Is that fact? Where are we with the data on that?
Yes, so we know that Muslims have had less of access to financial services. We also know that I mean, most Muslims, so in terms of the people who are unbanked or don't have bank accounts, 1 in 10 Muslims don't have bank accounts, so they are particularly impacted by the lack of access to financial services. Now, over the last 2 decades, when it's also compounded by post 9/11 and 7/7, as well as the hostile environment policies of the UK government, it has meant that people have been impacted by many more ways, and then having a lack of financial services also compounds this.
Okay, Aisha, thank you very much. That is Aisha Ghani on the banking in the United Kingdom. Quick snapshot of Tencent. This is the top line for you. The revenue missed 149.2 billion. So that's sub what the estimates out there was. There's a couple of other lines in there which, reasons to be cheerful. I'll leave you with a cheerful note, which is, of course, the net interest income is on the up on the social network. So I think
When
it's one uplifting thought.
on the indicator with the WMAs that I had asked Adam, he passed it on to me, but my question is, how do you put it to where it shows you red or green versus his colors of white, purple, and yellow?
Okay. You're going here
So I
and
just
you're going mentorship
okay.
averages and you're just switching off the momentum. If you
Yeah,
switch
I'd
on the
rather have
moment,
that.
yeah, if you switch off the momentum, then you'll have them off.
If
Then
what? So
if
I
you
uncheck it off.
check it off the momentums, then you'll have the colors of the averages. If you'll put the momentum, then it will tell you if it's a bullish or bearish at
Okay,
the start.
that's what I prefer. Okay. Okay, the demo trade took the long. I'm still in the short on the Top Step account. We're at the WMA. And that is the white is the 1 minute, the yellow is the 5 minute, and the purple is the 15 minute, correct?
Yeah.
Do I remember that correctly? Okay.
No. The yellow is a 15 minutes.
The yellow is the 15?
Yes, always was
Okay.
yellow was 15.
Okay. That's okay. I couldn't remember that part either. It's been so long.
Not the best day today. Okay, in 1 minute maybe you'll see a bit of the move.
Mm-hmm.
It's a new 4 hour
That's
candle
I'm
for
not. Uh-huh. So that's why I was debating to take a long and to get out of this short and just take a
the
long.
shorts still look good. Okay.
148.50 today. VIX printed a bearish, a bullish printout right now. Well, a little while ago. I just noticed it at.
Uh-huh.
I just noticed it.
5 p.m. in Hong Kong. Our top stories today. Inflation very much in focus. The Fed's Neil Kashkari
warning that he's not ready to call an end to rate hikes. 5 minutes from the last meeting drop at 2 p.m. Eastern. How many will be in Kashkar's camp? UK inflation comes in hot again. The pound jumps as holiday prices keep rising. Service sector inflation remains sticky. The news, of course, piling pressure on the Bank of England to keep raising rates. And financial giants will face fresh China scrutiny. BlackRock, Allianz, Fidelity. Maybe amongst key
ATR
stakeholders to watch in the country
3.3,
government
we're
debt
not going
crisis.
anywhere.
Local wealth managers miss payments to investors. Keep an eye on that story. Welcome to Bloomberg Surveillance. This is the early edition. I'm Guy Johnson. I'm, of course, in for Danny Berger in London. Pretty good very much in New York. Pretty, there's a lot to think about this inflation narrative front and center. China, not far behind.
Not far behind. I would argue interesting kind of read through into the market stateside guy, because you would think that if those Chinese concerns really did have a read through, you would see more of a sell-off. And we're seeing the exact opposite this morning. Green on the screen when it comes to the equity market futures, higher by about 0.2%, 44.63 for our radio audience on those contracts. But guys, the market really gets interesting when you look at the bond story, simply because of those contradicting inflation metrics. Remember, we had Neil Kashkari, as you just pointed out, saying, well, we might not be done, while all the data kind of points that, well, maybe we might be. So, of course, we're going to kind of, everyone's going to play economist for a day, if you will. And I think the bond market is already doing that. The two-year yield's coming back down between about 5 basis points, 489 on that note. What's interesting is that it is also dragging down the dollar. Now, some of this is coming from the UK, so we're going to talk about the counterweight in just a moment. But take a look at the Bloomberg Dollar Index, weaker at the moment by 0.2%. Again, the China read-through, not really there, even though, guys, I should mention, we did just get 10-cent earnings just a few minutes ago. They came in weak, so perhaps yet another warning about the strength of the corporate sector in China as well. And of course, NYMEX crude trading with an 80 handle, about flat at the moment, but you can definitely see the direction of travel is down.
Okay, so yes, close the POC from yesterday.
0.3, that's pretty much in line with estimates. As I say, what I think is interesting is take a look at the screen right now. Take a look at your Bloomberg. Look at the industrial production number, comes in way better than anticipated. This theme that is developing. The industrial side of the economy seems to be gaining a little bit of traction at the moment. Keep an eye on that.
What does it mean when robot says London is above Tokyo or London is inside Tokyo?
It's telling you where we are. It's telling you on which session where we are. We all. It's about. If it's saying about the Tokyo, it's meaning we are about Tokyo, and it's telling you from which date as well.
Inflation print we've just had out of the UK. It is coming down slowly. The problem is, though, that the core is sticky, services are sticky, holidays are sticky. All of that putting pressure on the Bank of England, plus the wage number yesterday. So the pound is rising on the back of that, 127.59. Pretty was mentioning 10-cent. NASPA's the proxy. This is what we've got in terms of the reaction to the numbers. NASPA's is down because 10-cent has missed. So that's stock down by, let's call it 3%, pretty.
Yeah, a lot to digest in the corporate sector from China as well, but I think the UK perhaps driving the market more in the bond market and the currency market, I would argue this morning. Let's go there. The UK's annual inflation rate fell last month, but by less than expected. This comes as the cost of travel and holidays climbs. The latest figures adding to the case for the BOE to raise interest rates again. Joining us now, Bloomberg's Valerie Teitel. She is all over this data. Valerie, walk us through it. A lot of the attention this morning was on the core number that came in a tenth stronger at 6.9%, matching the previous month's estimate.
Again, we're at the WMA,
It really has not budged.
the 1 minute.
It's only gone from 7.1%
One cross 15 already, but this can change very quick.
There was some good news for consumers in this print that headline CPI did fall, driven by a fall in food prices.
VIX is look like trying to go a little bit higher.
Good for the consumer, but for the Bank of England, it's bad news. We are seeing domestically generated inflation. That is the concerning bit. Very sticky. Services inflation remains sticky and is still on the rise despite the fall in headline. That is the one concerning thing. And Critty, if you look on a large scale, the thing that tempted the Bank of England to hike 50 basis points last time was a hot wage number and a hot core CPI print. We got those two today. The fact is, though, we have a long way to go until the Bank of England meets again. It's not until the 21st of September we do get another round of data.
The last time I listened to the governor, the last press conference, he was talking about the fact he was nearly done. We're getting ready to pause. That was the message that's been coming from a series of central banks over
Evidence
the years.
line is green now. I mean red now.
Red, yeah.
Kashkari
VIX
yesterday, so it'll be interesting to see what the minutes tell us
go a
today.
little bit higher.
The Bank of England's going to have a little bit of a rethink again. Do the markets need to have a little bit of a rethink? How much is being priced right now in terms of the idea that actually rates could be, as they've been telling us, maybe higher for longer?
Well, look, the one big, I guess, vulnerability for central banks that have gotten too dovish too early is just clearly in the bond market with those
The
repo
market
spreads.
structure just flipped bullish on the 1 minute. I mean bearish.
A slight scenario though, because if we look specifically at what's been supporting U.S. growth, it's been government spending.
And the
what has that
midpoint
caused?
moved
The
up.
surge in Treasury
What did it
supply.
move
What has
to?
that caused? This surge
Yep.
that we've gotten recently in real yields. And the concerning thing is there, in the coming months, the trajectory for government spending, we're heading to election year. It's still going to be strong in the U.S. And then if we do get a downturn, we get all these automatic stabilizers of welfare payments. So the trajectory of real yields, to many in the market's minds, is ever higher from here. And that could cause a bit of headwind for equity markets going forward. Certainly
Okay, well
not
thank you for telling me not to get out of my short.
the same theme. We're in the kind of big
Yeah, we are in a
market.
choppy market, so as you
The
are
demo
secure,
trade is losing. The demo.
Thank you. As always, let's go from Europe over to China, the fate of global
Uh,
investors.
TP2 is about to hit, but I want to take. I'm thinking about taking it off and then putting it back.
Firms exposed to the property developers'
Which is
problem
20
loss.
points
Now,
on one
let's look
contract.
at Sean Wilkins.
That hit, so 3
Who
left.
might be on the hook? Who has the exposure here?
3 micros left. I'm not doing no more minis because I kept blowing the account.
okay.
They take me a little bit longer to pass the stage
HSBC among some of the largest firms with the
with Top Step.
But as well, it's teaching you a patient at the same time.
a couple of those names.
Mm-hmm.
BlackRock up there, right at the top, about $350 million US dollars worth of outstanding notes. That filing is just as of a couple of days.
I mean, I can only make $1,300. What 1,300? Because I have to. I already passed the 3,000, but I made too much one day, and they're telling me I have to make more money.
Yeah.
I have to make $3,000.
Just a couple of
I
months
think
ago,
2,600.
Country Gardens bonds were trading well above
Don't
Plus,
try
I
to
didn't
make this in
trade
one
it.
day.
in sort of 9
Huh?
cents, 10
Don't try
cents
to make this in one day.
significant
Yeah,
off
but
there.
still,
Also
it
worth
takes so
pointing
much
out the
longer.
pace at which these distressed bonds are being priced at. We're not just at a distressed
So I need $1,300.
pricing for a
No, I
haircut.
need how much
A
did it say?
really steep haircut. They're not at 20 cents, they're not at 30
That's
cents.
work.
This is a very, very low
But I'm saying
level
like that's how they get us because they want us to make more
Next, what's the next step in this process?
than the
Opening up for
3,000
local
now.
investors as well. I'm seeing more and more trust companies. There's news that they're not making payments. Can I connect the dots? Are these things related?
Yeah, that's a really interesting question.
And I'm glad I wasn't doing micro minis because then I really would have. I would have lost the account yesterday.
This coupon payment. So
Mm.
that's going to be about roughly 3 weeks.
I need to make 26.44 more. $2,644.
Slightly different situation.
Because I'm
Okay.
at 72%.
On onshore, where of course the bulk of their business is instead sort of extending due payments. But as you say, this sign of distress in the shadow
So
banking
I got
market.
the two. I got TP2 done. I have 3 left.
Companies, which have been another
Micros, however, it's coming back up.
developers are now also feeling the pain as more property firms struggle to repay that kind of debt too. Now, shadow banking has been sort of heavily clamped down on by Beijing over the years, but precisely because of these hidden risks. And there are a lot of concerns over sort of transparency once again here. Now, we've seen a giant of China's private wealth management industry, firms affiliated with that, missing payments on trust payments. We had more news of more missed payments as well. We know that regulators have launched a probe looking into the risk of contagion here. But any kinds of stress that spread beyond just this one big giant, and even just seeing it.
So, what are your thoughts of the market today for New York?
Into a different and new
No clue, and I don't think so. I'll be trading it because we're going away somewhere.
Oh, okay, okay.
And I don't actually am happy that I won't be trading because everybody will be waiting for FMOC. So will be.
Oh, when's that today?
My time is 7 p.m., so it's 5 hours. Sorry, yeah, it's 5 hours
Okay, I didn't
after
know that was
open of the New York.
so. So don't trade around what time or be away. 'Cause that's what all the crazy stuff happens.
This is only the minutes, so I don't know how crazy it will be, but everybody will be waiting for what the minutes will show.
Okay.
And it's yeah, my time is 7 p.m. Ah, today it's oil at 3:30. This is why it's not moving. They're trying to fake out everyone.
JP, that worked. What didn't?
You see, this is in the areas like that, you need to be careful. If you open that trade, try to hold to it. Because if you will be opening a new ones, there will be like always risk going the wrong direction and losing the money from the contracts.
So are you doing retrace? You said you don't like candles, so you're just doing the algo and you're doing the retracement?
I'm not in a trade on it. I am in a short on oil, but I'm not in a trade on NQ.
I know, but the algo that you look at, you're just looking at the algo by itself?
Yes, I'm looking only for algo and moving averages and what's the name of them? Mentorship averages and moving averages, and that's it.
The background that you have there, what is that from?
Correlation tool. So this is showing me what that people buying now the 2-year bonds. So the market going down. This is the VIX showing the VIX going up, and this is a dollar showing. And also this is the dollar. And that too was Japanese stock going down, and yes, it's here. It's going down too.
Oh, okay. But the background on that on the main NQ, that's a correlation tool?
It's a correlation tool, and I set it up to work with what's the name of that? 2-year bonds.
Oh, okay. So is that an inverse to NQ?
Yes.
Do you help Adam make the indicators? I'm just asking.
Not really. We're giving some ideas what we thinking it will look good or what we
Uh-huh.
want to work.
Oh, okay. So, well, I guess I'm gonna stay in the short and just let my TPs take. I have 3 left. And then I guess I should be done for the day if I don't know. Because I
Yes,
traded yesterday after.
you need to be careful to do not overtrade. Even if you are like doing well, just to know where to finish, and especially when it's not going your way. This is the most important, and the really is the hardest to finish when you're not doing well. 'Cause it's easy to okay,
Hmm.
I want today, I make today $400, I'm okay, I'm walking away. That's easy. It's getting difficult
Hmm.
when you're actually losing and you try to just make some losses up back, and
Right.
then when you should finish.
That is correct. That's what I try to do, make up the loss because recoup the loss.
There
So
is not,
coming on,
there is nothing like recouping of the loss. If you're seeing that in a day you lost few times, better to walk away, come back later. There is nothing wrong
mhm.
to come back in few hours.
So coming in today, I was already down 300. So that was from 6 p.m. I think I tried to trade from 6 p.m. because I wanted that short, and sure enough, it went down, but not when I wanted to get in. And
Mm,
I didn't trade anymore. I watched some movies with the girls, and I went to bed. But I had already lost $300. So
that's
as of
good.
right now, if I were to get out of this trade, I'm still down $121. So that's what I'm saying. Maybe just be done with this trade, recoup this loss, and whatever profit I get, I get.
Yeah, that's the reason as well why I opening a few markets, not only one.
where it doesn't know whether it's beaten inflation. So the market keeps projecting and thinking, yeah, you know what, normal cycle, we're going to be seeing,
So we're under the
we're going to
firecracker.
see the Fed cutting.
Yeah, but 5 minute WMA and a view up is here.
Market structure for VIX is now green.
That's good. Okay, oil hit the target.
Absolutely not. And you've got two different arguments as
See,
well.
now
One
that
is that
printed. Okay,
because
so
of
now, let me
the
see.
negative story, this bear steepening that we've
So
seen,
yeah, I would still,
people
now I would,
particularly
like, say I would wake up
keen on looking
now.
for
Now I'd be looking for
higher,
short,
which is something else that the market's had to deal with. So that kind of move up in the middle in the belly has been
and I
really
wouldn't be getting in
spectacular. So that's certainly
until,
something to watch out for. The idea of cuts just continues to really,
where's my VWAP?
the market's
Oh,
really
VWAP's at
slowly figuring out
123.
what it's going to look like. What kind of
123
curve
is
are we going
pretty
to be
much
getting?
now.
And there's all kinds of things at the moment pointing to higher rates. And then you extrapolate that and you take that into the equity market. The equity market is not positioned for these kind of high real rates as well. That is another factor that we've got to bear in mind here. You then fold in liquidity. As that starts to ebb away, is that going to be another problem, another headwind for the equity market?
So I was also using the trading stop for the market structure. It's at 142.75. No, wait, hold on, where is it at? Do we have one?
No,
165. We don't have one.
no, we don't have it then. No.
That's the old one that stopped printing. Wait, yeah, it's 165. The trailing stop for the market structure is at 165.
Quite high, which is the high of today almost.
Mm-hmm. So I'll just leave it at break even because I'm at 160.25.
Okay, going to test the view up. Contrarian candles, 50% of previous 4 hour. But everything is still very red.
Well, we're under the VWAP. So what would you, I mean, if you were just getting up right now, what would you wait for? Would you wait for
They just now grabbing the stop loss from the people.
getting the stop loss from where? I'm sorry?
It was just stop loss grab now on a VWAP, and I wanna see if there will be some small reaction to that level or not. The scalper is still red and printing the square.
What was the low for today?
Ooh, that look nice. Very nice rejection.
What looks nice?
Not you're short.
Oh, yeah, but I only have 3 minis. I mean, micros. I definitely could have been talking about it at minis, but I don't want to blow their account.
Says he plans to travel to Hawaii to see firsthand the devastation from the Maui wildfires. Biden says he's spoken to Governor Josh Green, so the trip does not interfere with the rescue work. The wildfires
You
killed
can
almost
drop to
100
99.
people, making them the deadliest in the United States.
Not the low of the day of 81.
Modeling firm says the disaster will
99 will be a bit of the resistance, and this is will be a frank. Where in a Frankfurt we create some nice resistance support. Sorry.
Yeah, there's been a lot of criticism as to why the president hasn't been
So
making
would it
this
be
sort of
wise to go long at once the VWAP crosses back over the VWAP or no?
during this administration that maybe the administration has been slow to respond to crises.
I am in a long scalp now, and I took my first TP, but it's not something we will advise you to do.
Why?
Because your entry short was very nice, and trend is short now. Okay, we got the bullish divergent.
The group has been negotiating with GM, it's been negotiating with Ford and
Continuation on
but there is
VIX.
the parties have yet to discuss economic terms. He wants to get on with it. He wants to accelerate the process. Now, obviously, there's a kind of mechanical process that he normally has to go through, and he's saying, you know what, we need to speed it up. We need to basically get the rubber to eat the road, and we need to get on with this.
We don't have anything really to go long. I am break even. That's definitely not giving you any money away. Even I am like $30 in profit.
The United Auto Workers president in right now, so hopefully he will join the network soon. But Guy, in that same vein, let's talk about an industry that's actually been affected a lot by the unions. That, of course, is going to be the logistics story. An affiliate of Ken Griffin Citadel is said to have acquired roughly $485 million in yellow debt, previously owned by Apollo and other senior lenders, to the bankrupt trucking firm. The deal comes as Yellow seeks to secure a bankruptcy loan to fund its liquidation. Now, of course, remember, for the folks who aren't actually following this, the Yellow Trucking Company goes back almost a century in terms of kind of really building, I think, the infrastructure of the United States. But in the last 10 years or so, it really hasn't been able to recover from the global financial crisis. And that is an important part of their bankruptcy story. Now, in recent weeks, they've actually come out and said, well, that Teamster union, which represents, I think, a good chunk of their workers, not the majority of the logistics firms, but a good chunk, they are actually saying, well, because of those union negotiations that we went bankrupt, even though we do know there is that a loan that they still have from Congress issued to them during the Trump administration. A lot of cross currents here, but Wall Street already acting on what they're seeing.
Absolutely. a lot of people I've been speaking to, this is not my opinion, this is people I've been speaking to, believe that this company was already on the brink, that it's been teetering
See,
on the brink for a
everything is
very,
red.
very long
We
time.
don't have
I think
anything
pointing
like
fingers
profit
maybe
against nothing. The
is
line
a
is
little
red.
unfair at this point. But I think the bigger picture
Uh-huh.
that you raised about what's happening with unions, I think is really important. There is a clear demographic shift
Only one
which we
thing
are
is the
beginning
view
to
up didn't
enter. You see
change.
labour shortages from the
1
pandemic,
minute
that sort
change
of feels to
red.
be over. We're now entering a kind of new phase.
It's
We were
at the
talking
same level
yesterday
as
with Tom about
15
this.
now.
A new phase in which the demographic story is going to mean that there isn't going to be this large labour force. And in that environment, you would have thought that labour, you
Okay,
would
so
have
I'm
thought
gonna
that
put a
unions
demo trade
would
on demo, the
significantly
real
hold power.
demo,
And that in
at
theory could drive the market
123.25 long.
Well, it already kind of is. You can see
I'm
that
still in
a
my
lot of the volume at
short.
UPS, for example, a couple weeks ago, their stock tanked simply because of the margin pressures coming from these wage negotiations.
Oh,
And this is
man.
Netflix. They are dealing with the same
Ugh.
issue, guys. This is something we're definitely going to be talking to our next eco guest about, no doubt.
Absolutely. I do wonder whether what the kind of the cases you raised, whether that's related more to what is happening with the pandemic rather than the kind of demographic shift. Anyway, as you say, we'll talk about it. Karen Pickering, senior economist at Berenberg, is going to join us next. UK CPI, hot. We'll
And
talk
we're
about that.
under the
This
that
is
right there. Oh, there's just 139.
Okay, we're above 36, but 36 is red. Surge is finishing, so two things which we can see now will be either move up or continuation, nice continuation. Surge is almost done. As you can see, the bulls, they tried to push it, they didn't done a lot. On a scalper as well, we are on a 50%, they cannot cross even the 50%.
And we are ready. Oh, we're still in the expensive, neutral expensive area. But when does a new 4-hour print? We have a long ways.
Yes, it's just the new 4 hour. No, it's at 11, so not really. I mean,
Oh,
half an
oh
hour.
yeah, 30 minutes. Oh, an hour. Okay.
Now we've got to prove it
You have a prove it? Where?
on MQ.
I don't have a prove it. I don't have a prove it. I changed my settings to what yours was. Oh, I don't gotta prove it.
Wait
It's
till candle close. Maybe you'll have on a candle close.
oh, okay.
Okay, the nice thing is the trailing stop on VIX. It's starting. We're still printing the one on dollar. But I don't know. For some reason, I don't have a huge hopes.
Why?
I don't know.
I don't have a prove it. I don't want to come on, but okay. So the demo trade is going well on the VIX entry. I don't know where to put my. I'm still at break even.
Yeah, we'll need to pass 130 to go higher, and as you can see, we've got the divider line here. We've got the 50% of the market structure, so it's a quite nice support area.
And UK inflation comes in hot.
So now I have a prove it.
As holiday prices keep rising and service sector inflation
I just got it.
fairly sticky. The news
Okay.
highly
but still the everything is red,
And financial giants face fresh China
so the
scrutiny.
profit is not
BlackRock, Allianz,
confirmed.
and Fidelity may be among the key stakeholders to watch in Country Garden's debt crisis. This is more
We just
global
we're
managers
we're
worried
getting
institutional investors.
a
I'm Katie
bullish
Bishop in New
entry.
York with
Where
Guy
did it
Johnson
come?
in London. Guy, we talk a lot about the China
Right,
story.
that's
You're
what
the
that is.
primary story there. And
That
right now,
printed
you're actually
starting. I barely
outperforming
noticed
inflation,
it.
both
Starting
in
at
the property sector, even their tech sector. I'm not sure what's on the
But
It
as
radar
you can
started
for
at
see,
416.
This may be one of those stories that takes a while to come
yeah,
through,
but what you can
but in
see
the
is
past,
still
for those of
printing
us
the
that follow the
search.
macro
Search is not
dynamics, those of
finished,
us who
and the
look through
line are
the
still red,
devaluation,
both of them.
we have seen the effect that China can have
On
on
a
the
scalper,
economy.
we
We came
passed
out of the last
over the
crisis, 2008,
50%, but
2009,
we
China
start
powered the global recovery.
printing the
So there'll be
square,
less
which
potentially.
means that the bulls are tired.
Top 600. I've been told watch 453.
Oh,
There's a key line in the sand there on the moving averages. We're basically flat. Again, quite range bound. Within there, there's some individual stock stories that are worth focusing on. Pounds up quite strongly, up by 0.4%. The market seems to believe that yesterday's days and today's days of the CPI number will encourage the Bank of England to go further. The market is now pricing 6% as the terminal rate. 10 cent has missed the proxy in Europe. Naspers, big stakeholder, bad stock critic, now by 2.88%.
Yeah, I mean, you bring up a good point about the devaluation. And Guy, I will say I'm both older and younger
There
than
is
I look. We'll
nothing
leave it at
green
that
if
here.
it's
When we
still
look at the
above
futures trade, though, it gets
200
really
moving
interesting. We are in the green at the
average.
moment, but pairing back off the
Background
gains we
is
saw
red
just 30
for
minutes ago in
everything.
New York, 44.59 on the S&P futures, higher by 0.1%. Again, not any major conviction in either direction, but enough to say, look, maybe there is a little bit of positivity. Remember, yesterday we sold off, though, so it might just be a simple reversal of that on this light summer day. The two-year yield gets interesting as well because really it feels like the repricing is mostly coming from the bond market, not necessarily the equity market. Those real yields are going to be playing a role, especially as we talk about the read-through, not from China, but from perhaps the UK and Europe, where you are getting extremely hot inflation data. Two-year yield 490 is where we'll call it. The yield story bringing down the dollar as well. And again, that's also going to be a function of the UK story. So that's going to be something we want to watch as well. Bloomberg dollar index down about 0.2%. But Guy, if we're talking about a pullback at some point, or even resilience in the economy, you would think there would be more volatility in the crude market, and we're not really seeing that. NYMEX crude really testing the 80 level here, now 81, really unchanged on the day, but perhaps that's where the volatility is due to pick up.
Crude came up pretty rapidly. Now seems to be consolidating a bit. But yeah, it's a good point, as well made. Let's talk more about that inflation story, Critty, and how the Fed is reading the narrative that it sees in front of it. Investors are now waiting for the Fed's latest minutes. I think they drop at 2 p.m. Eastern. What we're going to get there is a glimpse of the official thoughts on the bank policy path from the last meeting. Neil Kashkari, though, has gone from being dove
Everything's
to
still
being a
red.
firm hawk. And it was interesting listening to him yesterday, very much making the case that he feels that the Fed should not be done yet.
Are we done raising rates? I'm not ready to say that we're done. In terms of cutting rates, I think we're a long way away from cutting rates because core inflation is still around 4%. It's still around twice of what our target is.
So how many will be in Kashkari's camp? It's going to be interesting to see whether it's just a minority that believe that the Fed could hold at these current levels.
Okay, the
And what's
bulls
the read across the
got
top central
very
bank
tired,
GPI
so the
data out of
bells
the
they
UK
should
yesterday?
start
CPI
selling
number out of the
now.
UK today. Callum Pickering, senior economist at Berenberg, joins us now.
Search finish, no
Do you
bullish
think
move.
Kashkari's right? Do you think
Nothing.
the Fed might have
Go
more
that
to
way.
lose? The market anticipates
You
we'll be seeing
Saras.
cuts
On
in
the speaker,
Fed
please.
policy on that.
I wouldn't over eagerly anticipate cuts because all of the latest data from the US is consistently better than expected. There's a lot of resilience in the economy, but monetary policy is now tight in the US. By definition, that will disinflate prices over time. It's just a question of how long it takes. If you're willing to tolerate an 18-month horizon and just accept actually real benefit from this stronger than expected economic data, great. If you're desperate to get
And you're
into
saying we should, if we go any lower, it'd probably be to the 190.
and I
I
don't
mean,
think
I'm
we're
sorry,
entering
to
a global
90.
recession.
So it's not enough. It can sit sides. It can wait for the real rates to work their magic, and the economy
99.
will glide to a soft landing. He said the same thing about the UK.
Green
Timing
extension
is
of
still
the
close for a soft
opening
landing. We didn't
range.
get the recession over winter that was widely anticipated. The outlook is
How does
still
Adam do his significant
for the
levels?
next 2 years, but it won't
Does
happen
he just do a
immediately.
daily fib on the
One
daily
thing we
prior
should
candle?
be thinking of is what will happen
No, I
when
don't think so. I think
spreads
so.
not be
Just going through the levels on the way which he was learning, teaching us. at the beginning. I can show you that probably tomorrow or some other day.
Okay, because he doesn't post them all the time, and I was
Yeah,
just wondering.
yeah, I will show you that. And I think so there will be somewhere video in a library, but
Hey,
I
there is.
can
Okay, what would it be called?
I don't know. You will need to ask him, or as I mentioned, I can try to show you that tomorrow. Because today
Okay.
I will be finishing in like
Yeah.
40 minutes.
Yeah. No. That's fine. Then I'll talk to you tomorrow. I'm gonna leave this at the way it is, at the short and at break even. And my daughter's bringing the grandkids right now. She just texted me,
Okay.
so let's go to work. She's gonna bring me the kids, so I'm gonna go lay down with the baby so that he stays asleep.
Okay then.
Okay.
Talk to you later.
Hopefully, prayers that my trade works all the way through and I recover this and at least make $100, $200.
Okay. Bye.
Okay, thank you.